welcome to the Enlightening Masterclass series for CFOs brought to you by Imarticus Learning. Today, we dive into one of the most dynamic and rapidly evolving areas of finance, staying abreast with the ever-evolving fintech landscape. We are privileged to be joined by the industry expert who has been in the forefront of fintech innovation, Mr. Vikram Pandya, Director of SP Jain, Dubai. With the vast experience in leveraging technology to reshape financial services, Mr. Pandya will guide us through the latest trends, opportunities, and challenges in the fintech world. Get ready for a session packed with deep insights into how fintech is revolutionizing traditional finance and what it means for the future of this industry. Please join me in welcoming Mr. Vikram Pandya, Director, SP Jain, Dubai.
Anyone else?
Sir, Rajesh here. So on the lending side, I feel if you can keep the NPAs under control, right, then this can be a very highly profitable concept.
Okay. So let us go through this journey now today. It will be an interesting journey because we are going to look at how this entire building block around, let's say, fintech is going to affect you and how you can utilize it for your own benefit, right? And what are these new age solutions available? How you can identify which are the ones which are usable for your business versus, let's say, just a fad which may not be useful at all. So let us look at all those things in a structured manner. We'll start by understanding the definition of fintech. What is fintech in a scientific manner? We will look at what is embedded finance, so that you are very clear, because most of the CFOs normally use fintech in the embedded finance format, because fintech you will never ever utilize in isolation, right? You will not use fintech as a product most of the times. It will be embedded to whatever third-party products that you are consuming or a software that you are using. So we'll look at that as well. So let's start with that journey. So what is fintech? It is a definition-wise very simple definition, but you need to pay attention on some of these terms which are marked in bold. So fintech is use of emerging technology. That is number one. In design and delivery. Now this is the most critical part. People only think that, okay, fintech is all about designing the product or delivering just the experience. So it is both, combination of both. And design delivery of what? Financial product and services. Not everything is covered under fintech. Designing and delivering of financial product and services in such a manner that it can be less time consuming, more efficient and effective in providing the access and experience to the customer. So you can see the definition itself, if you remember, it can give you the complete end-to-end answer about how fintech is behaving today. And this is the definition which, if you look at, right, this is like even World Bank, BIS, the way they look at fintech is exactly this definition. So today, I am sure you guys have used fintech products and services as an individual as well, or as an organization also. But whenever we look at, most of the times we look at, okay, somebody is giving me one mobile application where I can just click and get loan. But what about the KYC journey which you are taking on that application? That is useful in delivering that product. Otherwise, you cannot use that product at all. Just imagine if you look at one click, 10 minutes loan processing or 2 minutes loan processing. That is not possible without video KYC embedded as a part of that journey. It is not possible without having PAN verification embedded as a part of that journey. Which brings us to the next definition, which is embedded finance. Embedded finance uses APIs. Now, what is this API? API is nothing but application programming interface. Basically, think of API as a data pipeline, okay, or pipeline to perform some action. So this APIs allow user to now directly consume those services without leaving the journey that they are currently taking. So when we are looking at the example of, let's say, Make My Trip. You are on Make My Trip, you are booking your flight ticket, but during that flight ticket booking journey, you can now book insurance product. You can now apply for EMI, and that is embedded finance because you are on the journey of booking your flight ticket. And in that journey, in that third party user journey, you are getting ICICI Lombard's travel insurance or baggage insurance. Then you are getting EMI from multiple different banks when you are trying to make a payment. Pay later models which are available today, buy now, pay later. All these things are available as a part of your normal flight booking journey. You are not living that journey and searching for different options for your baggage insurance or travel insurance. You are not doing that. In fact, those options are available to you within that journey. And that is what embedded finance is all about. So if you look at overall, you have embedded commerce. Within that, you have embedded finance. Embedded commerce is the mother tongue within which you have embedded finance. So are you guys very, very clear with the definition? Any questions on embedded finance whatsoever? Because fintech and embedded finance is the core area which you need to understand before we start with examples and everything else. Any questions on this?
No, sir.
No, it's very clear.
Okay, great. Which means that today, can somebody give me examples of embedded finance that you have used in your day-to-day life? Embedded finance. Anyone? What kind of services that you have used which was available to you in some other journey?
It could be linking of ERP to banking system for making, payments automation.
Perfect. Yes, absolutely right. It is a B2B use case. Where what you are saying is that my ERP system, it can be Tele or it can be SAP, whatever, is connecting to my bank. That is what a subsection is called connected banking as well, right? So embedded finance and connected banking, they are of course parallelly working. So embedded finance again is a superset within which connected banking comes because you are just using your own banking products, right? That is where it is a connected banking. So what you have just mentioned is an example of connected banking, which is a term within embedded finance. Perfectly correct. So I wanted somebody to answer that. Definitely you have answered that. Anyone else? Manish is saying loan processing. Loan processing. You need to give a particular example. Otherwise, it is very generic one. Himangi saying within Ola app, we can apply for loan or see cars. Okay, so this is very interesting. Understand the difference there, right? So let's assume on Paytm application, understand the difference here. You are getting so many other options like buying insurance, etc. Within Ola also, you are getting multiple options. So again, it is not embedded finance directly. It is what we call as a super app. Super app has everything, right? So they are just connecting it, but it is not about the journey, user journey. Understand the difference. So when you are booking the, let's say Ola cab, and as a part of Ola cab, you might have seen book insurance for 1 rupee or 10 rupee, 9 rupee, whatever, right? That is the embedded finance. But if you
So
just
will it be like on Make My Trip you're getting while booking for flight you're also getting to book for hotels also to book for, so that can be the
that is embedded
example
commerce. That is embedded commerce, not
commerce.
embedded finance, because as we discussed, right, it should be finance related stuff. So
Okay.
what you mentioned is perfectly correct, and that's where it comes under embedded commerce. It is not under embedded finance because when you are searching for a hotel, there is no financial product or services you are consuming.
Right, right.
So that's the reason it is embedded commerce. But embedded
Okay.
finance is
Sir,
where you are
or
consuming
sir,
your.
or Sir, or can be the Amazon can giving opportunity to pay later and all.
Yeah, so absolutely. So whatever, as I mentioned, is related to finance
Anything
is what,
related to money, basically.
yeah, it
Okay.
can be, as I say now, under embedded fintech, what all you will cover, right? So it is payment, lending, insurance, wealth management.
Right.
Either of these four products, right? That will go under that.
Sir, what about the wallets?
Yeah, so I will come to that one by one. So I'm looking at whatever is mentioned in the chat. So I wanted to clarify that. So in Ola application or in Paytm application, normally when you open and you just have options for things to do, that is just a partnership, right? It is like partnership and you have put that link. It is not as a part of journey. So if you are using some journey and within that you have option to consume that, then it is called embedded finance. Otherwise, it is a super app. Super app is
So
use embedded
something like GPay, which also gives you an option to there is a navigation to go for a loan journey, which takes you to the loan journey, or it
So
takes
it
you
is
to
the
the
SDK.
CRM journeys.
Yes,
Uh,
correct. So that is SDK.
those
SDK,
SDK,
what is
yes,
SDK?
yes,
So that is
correct.
embedded within that, and you can then experience that other application within this application, right? So that is
Right,
what
right.
typically happens. So that is a
Sir,
separate
sir,
area.
Okay, okay.
when you book your tickets to Make My Trip, you can also opt for insurance and make the payments.
That's
Secure
the
the,
example which I gave, correct? That is the example which I
yeah,
gave. In
okay.
that insurance and let's say even EMI payment that you do, right? That is the loan product. And the
Can we
takeout.
say that about there are a lot of stuff which is called RPA for AR and AP reconciliation?
RPA is different. RPA, you are talking about which RPA? Because RPA that,
Basically, there's a lot of tools which are available. You just
yeah, so
upload.
robotic process automation, right? You are talking about robotic process automation.
Yeah.
That RPA has nothing to do with embedded finance at all. So RPA
Okay,
is
okay,
basically the tools which help you automate stuff.
yeah.
So that again, nothing to do with embedded finance. Now coming to digital wallets.
Sir,
One by one. So I think what you should do is that, of course, you can raise your hand and I will allow everyone to speak. But at least I know who are going to speak, right? That is a good thing. So if you want, you can always raise your hand and I will allow one by one. Okay, coming back to first of all, digital wallets. So digital wallets, just by nature of the product itself, is not embedded finance. But when the digital wallets are available to you in some other application as a checkout journey, then yes, it is the embedded finance product. So if you remember earlier, um, Uber and Paytm had that integration available, right? Where you can simply walk out without paying and Paytm will get debited, correct? That is an example of embedded finance. You're absolutely correct. But just digital wallet by standalone product is not embedded finance. So, Kundip,
Yeah. So I'll give you example of my company. We had introduced for our channel partners, we had introduced dealer portal. So earlier they were ordering manually. We provided them a login password and they were able to order the material. Now, once they have ordered the material, invoice also is visible to them and they are able to make payments using payment gateway. In addition to that, what we have done is we tied up with ICICI and they have made available the channel finance program, which earlier was running outside system, is now embedded there. So the moment they try to make payment, either they can use their own funds using payment gateway, or they can simply apply for channel finance. Their limits are already in place and the payment is made and their loan account is debited.
correct, perfect. So this is the example exactly of, as I mentioned earlier also, that it is a connected banking example within the embedded finance, which is perfectly correct because it is your bank that you are directly able to debit, right? And you can consume whatever services are available from your bank. And just because you are mentioning this right now, let us look at even couple of examples around that, right? Because you mentioned, so let us look at it. Let's say your bank is ICICI Bank. Right? So what you can always do, by the way, you can choose any bank for that matter. You can always search developer Developer space the bank name. So let's say ICICI Bank. The moment you do that, you will find API portal for that bank. So this is the service provided by that bank itself. And here you can see, okay, under that we have Explore APIs. And you have APIs provided by the bank to anyone, right? Anyone who would like to consume ICICI Bank's product in third-party application. So somehow it is still loading, but let me just see if I can show it to you. Looks like today they are under some development. Let me show you
So
develop.
this is normal ICICI Bank portal, or you have gone to some different ICICI
No,
website?
this is the developer portal for ICICI Bank. It is the official portal provided by ICICI Bank. And you need to understand, look, API is a strategy typically, right? And as I mentioned, it is just the way in which you can consume product or services anywhere. So in this scenario, look, ICICI Bank, what is that they would like to sell? Can somebody tell me? What do you think ICICI Bank is selling? Think about that. Do you think ICICI Bank is selling APIs?
No, their service.
Service. So basically, they want to sell CASA product, right? FD, or they would like to sell some other banking service like payment, etc., whatever.
Loans.
Yeah, loans. Correct. Absolutely correct. So this is what they want to sell. Do you agree? API in that scenario becomes a channel. API becomes channel using which they want to sell this. Are you guys agreeing to that statement? API in that case becomes a channel because ICICI Bank is not in the business of selling APIs. APIs are provided because they want to sell what? CASA, FD, payment, loans product. Correct? So similar to that, let's assume we look at developer Axis Bank.
एक्सिस बैंक का लोड हो रहा है, मैंने एक्सिस बैंक का ट्राई
Yeah, it will open.
किया ना,
So
so
if
it's
you look at
loaded.
API list, API, and you can see connected banking separately available, right? Under that. So what happens here, you can see feature product, product APIs, and you can see different, multiple different packs which are available. Corporate payment, corporate collection. So it is still loading. I think this give it 1.5 is not something which should come. It should show as a star. Yeah, okay. Finally it came. So here you look at, they have created certain packages. So let's assume somebody would like to enable corporate payments as a part of your Tele ERP or SAP ERP. Then they will click here and they will then integrate this APIs. So instant account statement or debit card notification API, reconciliation, corporate payout API, service request, beneficiary management, all these different APIs are then useful for that purpose. So basically, if you look at how API looks like, it is something which you as a user are not bothered, but developer is bothered, which means that it is a business to developer to customer business model. Normally, you come to know about B2B, B2C, B2B2C models, but APIs unlock a new business model called business to developer to customer. In this scenario, ICICI Bank or Axis Bank, they are opening up their APIs to developers. Developers will consume these APIs and integrate this service in, let's say, ERP system or in some other super application. And using that, customer like you and me will be able to consume these services without bothering about how the technology works. That is the power of integration. So are you able to understand this clearly, Kundip, that this is what typically happens behind the scene? That's why this connected banking and this APIs are useful. Clear?
Yes.
So that is how typically people integrate with each other by looking at this API. So for banks, always remember, for banks, APIs are channel, not the product. However, there are certain other players who will use the bank's API only, by the way. But for them, API is a product. So let us look at some company like, let's say, Setu. Now, they are giving you full stack fintech So if you are a new company and you don't want to partner with multiple different banks, you want to pick and choose product from different banks. Let's assume you like savings account very much from Kotak Bank. You like ICICI Bank's Demat account, and you like loan from maybe HDFC Bank. Okay. What will you do? Will you connect with all the three banks? Not required. What you can do, you can have some player like Setu or Decentro. There are a number of players now today in the market who have integrated those different banks, and they provide you API as a product, not as a channel anymore. For bank, it is a channel, but for service provider like Setu, API becomes a product. They are selling API. They are not selling CASA. They are selling APIs. How? So you can see KYC, e-sign, then you have different account aggregator. You can even see certain other products, right? So lending, wealth tech, insurance, banking partnerships. You can even see M2P. The largest player in this place is M2P Fintech. So you can even see what kind of products they offer. So look at this. Under products, banking, debit card, neo banking, connect, lending, credit card, BNPL, loan origination system, debt collection, everything is API. Under payment, prepaid card, issuance, then cross-border payment, pay later, flood drive, all these are the different products available via APIs.
So, sir, individual retail users like us can also use Setu?
No. As I said, API is a business model which is business to developer to customer, right? So you will always use some third-party application where they might have integrated, but you don't know.
So current pain point, as you were mentioning, for retail user is also that I have different bank accounts, different Demat accounts. How can I see everything in one place?
That is where applications like FiMoney, FI.money, or you have applications like Jupiter Money. They are the application provider who provide you this integration available. So you can see, if you look at FiMoney website.
FiMoney.
Yeah, FiMoney, right? So if you look at them, for all things money, whether it is planning your savings or new age saving account, interest mutual fund, all of this. Right? So if you look at, they help you aggregate everything. So they also give you, it is a neo banking application where they have partnered with Federal Bank to provide you with the savings account as well. But they help you link all your bank account, all your investment account under one umbrella, right? So they will integrate with everything. So using account aggregator, PinView, which is account aggregator, RBI authorized account aggregator.
And sir, how secure this is? Are there any risks?
Look, security wise, understand that, as I mentioned, it is RBI approved account aggregator framework. So those who are not aware about account aggregator, you should know. So in which ways we were supposed to go account aggregator later, because you have mentioned, let us cover and finish it first, right? So account aggregator, have you ever used it? Anyone here has account aggregator ID created?
Sir, in GeoFinance, GeoFinance has started a pilot project, or we can say beta version, that I had used, but then I was not very confident whether I should give all the rights to them, and then I have not used extensively. I started, but did not go ahead much.
So in which ways you are not clear about what is account aggregator in the first place. So let me explain it to everyone. What is account aggregator? And this is very useful for CFOs. Okay, so understand the nuances around account aggregator. In account aggregator framework, you have three different core players. One is called as a financial information provider, FIP, financial information provider. Then you have FIU, financial information user. And then you have account aggregator, NBFC, which is the RBI regulated NBFC. Okay? These are the three core players. And then you have a user who will give the consent. Everyone, I'm assuming, knows here how the UPI works. Right? So I don't need to go and teach you what is UPI and how you can make UPI payment. So can somebody tell me, if I want to make payment to anyone using UPI, what do I require? What do I require for that? For making UPI payment?
Barcode.
UPI ID.
Barcode.
Yes. ID. UPI ID.
Exactly. UPI ID. So how can somebody give me example of UPI ID or your UPI ID for that matter? How does that look like?
It is usually alphanumeric.
That is fine. But what is the structure? If you can say,
So
Maybe our
XYZ.
name.
That okay, HDFC types.
you can put it in chat window for everyone's benefit, maybe. Yeah, it's okay. Great. Aswini at the rate, okay, excellence. Absolutely correct. So you're right. It is something at the rate something. Do you agree? Everyone agrees on this, right? It is called what? What is this, by the way? This is called VPA. Virtual payment address, by the way. This is called VPA. Now, you use this VPA to transfer value or money, correct? Exactly same format and method, right, is utilized for account aggregator framework, where instead of sending money, you are sending data. Everything remains the same. But instead of sending money, you are sending data. So how does that work? Let us look at this, right? So you have FIU, Finance Information User. So let's say user has bank account with Axis Bank and he would like to take a loan from HDFC. So this is the normal scenario. Do you guys agree? This is how normally you may want to get loan. If your bank is not giving you better rate loan, you will go with someone else. Correct? So today what happens? Today, your HDFC bank will require data from your Axis Bank. Last 6 months statement, etc. Yes or no? Do you guys agree?
Yeah.
Yes, sir.
But what if even if you give statement can be modified today. You know, PDF statements I can modify. So people will say, okay, but print out and stamp. Again, it can be forged. Do you know that?
Yes.
Whenever you look at it, can be forged. So what is the safest option? Server of Axis Bank directly sends data to HDFC banks without any human intervention, without any avenue for data tampering. Okay. So how does that work? So FIP, Finance Information Provider, in this example, is going to be Axis Bank. Because with Axis Bank, you have your bank account data. FIU for this transaction is HDFC Bank. It is a financial information user because HDFC Banks is going to consume your last 6 months data. So it is the HDFC Bank. Account aggregator can be anyone. So let's say FinView or OneMoney or Anumati, which is by Perfios. There are like 16 account aggregators which are live. These account aggregators are RBI authorized account aggregators. They need to follow all the security standards which are mentioned by RBI. So what typically will happen is that user uses account aggregator mobile application, similar to how user uses Paytm or Google Pay to make a payment in UPI. User uses account aggregator's application normally in order to authorize the transfer of data. So in this case, user will get a notification. Okay, how it will work, let me show you. This first step, step number 1. User opens Axis Bank loan application. 2. User enters virtual account aggregator ID, VAID, virtual account aggregator ID, which is exactly similar to how your that other Aswini at the right HDFC looks like, right? You will see live example also. So user enters VAID, which is virtual account aggregator ID, and submits the ID. 3. User receives request on account aggregator application for the transfer of data. Now, user will see that HDFC Bank is requesting data for last 6 months from Axis Bank. Do you want to approve? That is the message that user will see. And not only that, HDFC Bank can choose to continuously fetch the data, not only one time, but continuously fetch the data on a daily basis, or on a weekly basis, or on a monthly basis from Axis Bank till the time loan is active. Till the time loan is active, which is very, very useful for HDFC Bank, because in the traditional approach, you just get the 6-month statement and then you don't get anything. But under this, you are able to get recurring data, which means that you need to have better, or you can have better early warning system. So in this scenario, once you approve that, okay, I want to allow connection, then in that case, Axis Bank will receive your request. Once Axis Bank receives your request, it will also ask for the OTP, saying that you are authorizing it or not, right? So it will authorize again one more time. And based on that, HDFC Bank receives the data in encrypted format, which only HDFC Bank can open. Which only HDFC Bank can open. So this is how it works. So it is completely secure, foolproof. Are you guys able to understand the workflow? Let me now show you a simple video about how it works and looks in the real world data.
Data sharing, as we all experience today.
Is the audio audible?
Audio audible, but video not there.
No video.
वीडियो नहीं है ना?
You are not able to see video.
No.
Okay.
No.
Is it visible to you?
Yes.
Video is now visible.
Okay.
Audio.
Visible. I have made it full screen now. Is it visible?
Yeah.
Yes, visible.
Play. Let's see
Yes,
if the audio will come through.
Let me now directly go to the area which
exists amongst reams of paperwork and spreadsheets. So an app like Fi attempts to give me insights on the back of data that would be shared via the account aggregator ecosystem. Fi is a financial information user, and they want to offer me insights like what have been my spending patterns over the last few weeks. And in order for them to do that, they need to plug in to the account aggregator ecosystem. Out here, I'm going to use OneMoney, which is one of the account aggregators, to register and facilitate this transaction. So I register with OneMoney, and once I've done that, they will then discover where all my data resides, what all bank accounts it resides in. So out here, what shows up is a list of banks that
you can see here that this user had 3 bank accounts, correct? Then you have within Axis Bank, fixed deposit account, current account, and maybe a savings account. There are 3 accounts within the Axis Bank itself.
contain access to my.
So you can see savings account, fixed deposit account, and current account. I'm just reading out in case you can't read on the screen. So I'm just reading it out for you. So if you look at, there were 3 bank accounts, out of which, because you want to bring every bank account together, you have option to pick and choose which bank account you want to track. Because it is users' right or users' control, which is very critical, right? Otherwise, you can bring everything, but user may not want to bring everything, right? So user can pick and choose what kind of accounts you want to aggregate.
My data. And once I've authorized saying, okay, I want to go ahead and link my Axis Bank accounts.
So here, Axis Bank account, once you are linking, because it is Axis Bank account, Axis Bank is asking for verification. Understand the difference, right? Because you are trying to integrate Axis Bank's account. So if Axis Bank in this case becomes FIP, remember that, right? Financial Information Provider. Axis Bank becomes financial information provider. So FIP will always verify who you are. Just because somebody else can use your mobile and try to integrate, right? So what Axis Bank is verifying that you only are the person who you are claiming to be, and your PIN or whatever you have set up, you can enter that again. Or even OTP. You are using your own mobile device. It can be OTP as well.
This bank then authenticates that it is indeed Siddharth that is authorizing this linkage and no one else.
So here, if you look at, I don't know whether you can read whatever is on the screen, but you can see the detail. What kind of details are fetched? So it is a balance and the transactions. This is a detail which is fetched every time by the FiMoney application. Then what is the consent duration? Till what time? Till what time you can fetch? Ashwini, I'm going to mute you. There is some background noise coming. So the duration is here 1 year. Okay. So FiMoney will continue to receive this balance and transaction for 1 year period. And for which account? So this savings account and fixed deposit account, which I have added. Right? So this is what the consent artifact looks like. This is what you see for the consent. And when you click yes, swipe to complete.
And once that linkage is authorized, I now proceed to actually granting consent. I review what data I want to share, for what purpose, for what time period, and if that's okay with me, I then go ahead and say yes for that data to be transferred. And in real time, Fi now gets access to my financial information and can apply their analytics to show me various insights on the back of my spending patterns. And
so now you can see within the FiMoney application only you are able to view everything, right? Because FiMoney will automatically realize your transaction and show you where you are spending more. So this is the personal finance management application use case. And like this, you need to have different use case wise, you have different purpose code also. So let me just share with you. What are the different purpose codes available? So if you look at the purpose code, one is wealth management service purpose code. You have consumer spending pattern, budget or other reporting purpose code, aggregated statement related purpose code, explicit consent for monitoring the account, and then explicit consent for the account. Yes, Hemangi. Yes, Hemangi, you can speak now. Am I audible?
Yeah, audible.
Okay, maybe Hemangi is. I don't know.
एक गिलास में डाल के मुझे दे दे.
Hemangi, can you hear me? Okay, looks like she's frozen, right? I'm assuming she's frozen. Okay. So you guys now understood how the account aggregator works? Any questions on that?
No, sir. Perfect.
So I have a question.
Yes, Rajesh, you have a question?
Yeah. So here you could also aggregate all your investments let's just say
Yes, so whatever is live currently, you can see even whatever is live using the sahamati.org.in. What are the live products which are available?
Yeah, okay.
You can view what are the live services. I will keep you Rajesh for the time being because again there is some background noise coming. Yes, Kavalya, okay.
Kaivalya here. So the business model for the account aggregator works as is per request. Is there a my bank applies a charge to them, or is it also managed through RBI's framework? Because RBI may be charging some to use their framework.
No, so
how
what
does that work?
So what happens is that they are allowed to charge two different entities. One is FIU, because FIU is requesting the data, right? For FIU, earlier the physical document verification cost was there. So now that cost is removed. So FIU is benefiting, right? So FIU can pay one, or they can charge even the customer. to provide the better user experience, right? But everyone in India knows that customer is not going to pay. Don't you agree? So FIU is the current revenue model for that. So per request, as you rightly mentioned, per request, the charges are around, let's say, 5 rupees to 10 rupees based on the frequency. So if it is a frequent thing, then you will charge 5 rupees based on the volume. Otherwise, it is around 10 rupees also. 5 rupees per request.
Okay. And does RBI or on behalf of government, somebody collect something to establish the framework that keeps it secured and audit? Because there must be a cost of audit also for a framework.
Audit is there, but that is the cost for NBFC account aggregator, right? So if you want to operate in this, you are supposed to comply with the RBI regulations, and that is a cost for you.
Okay.
Correct? So RBI will never charge for their audit, right? RBI will always do audit for bank. RBI never charges for that.
Understood.
Yes, Hemangi.
Yeah, so what I wanted to ask was, how are these aggregators, like that one money is actually getting the data on all the bank accounts? Will it be like Aadhaar linked accounts or
No.
mobile
There
linked
is a
accounts?
framework. So that's the reason if you look at this industry state, right, you can see FIP and A integration, which means that there are so many account aggregator I mentioned. So you have Anumati, KEMS, CRIF, DGO, all these are the account aggregators. Can you see? These are the account aggregators, as I mentioned, right? On
So
the
banks
top.
would have provided the data to them.
Wait. And on this row side or on the left-hand side, you can see you have entities. So GSTN data, CDSL, your depository related data, then CRA, KEMS data, all this like different data sets, right? And the banks also. Now they need to integrate with each and everyone. Look at this. So, for example, Anumati is not integrated with Protean Ego. Can you see? It is not integrated, not live. So, for example, if FIP is Protean and your account aggregator is Anumati, then you can't fetch the data. It means that. Okay. Similar to that, you can see even this AU Small Finance Bank is not live with Digio, which means that if your FIP is a small finance bank, AU Small Finance Bank is your FIP, and Digio is your account aggregator, then you will not fetch data.
Okay. But when they're integrating it with respect to this, so there must be some identity that they would be like assigning it to the user, right? So
So
what
identity
would
is
be that?
nothing but account. So what happens? Look, today what do? You have your mobile number, which is linked to your bank account, correct? So when you are connecting your UPI for the very first time, remember you need to link your UPI with some of the bank, right? Which bank is your default UPI bank? Exactly same way you will do it here as well. So let's assume we have one money. So here now you can see if I click add bank account, you will see there are like multiple accounts which it is showing it to me. If I select, let's say HDFC Bank, and I continue, so it automatically fetches my HDFC Bank account using the mobile number from my profile, right? So it has identified that in HDFC Bank I have this account. I can click link.
Okay.
Similar to UPI, exactly
So
like
that
UPI.
is like API exchange only happening. This is
Yeah.
asking, inquiring, and then
Yes.
got it.
But it is using the mobile number which is linked to your bank account.
Right.
So, sir, One Money and FI Money are both similar product.
Sorry, One Money and
FI Money.
No, One Money is account aggregator, RBI authorized account aggregator, NBFC. Five Money is not account aggregator. They are the FIU. In the video that you saw, they are FIU. They are consuming the data from your bank, right?
Okay, so front-ending app for user is one money.
No. You are not getting this right. One money is consent application for the user. Understand the difference? Consent application for the user, while 5money is the front end application for the user to view all the data.
Okay.
Got it? Consent NBFC account aggregator NBFC can only provide consent mechanism. They are like a blind postman. They can't look at your data.
Achha.
They can just deliver the data from FIP to FIU. That's it.
Okay, so basically, if I want to see my all data together, I have to use FI money, and
yes,
FI money will use one money for
correct
consent mechanism.
Correct, absolutely right.
Thank you, sir. Now I got it.
Okay, great.
Sir, I had the same question with Pundeep earlier.
Yes,
Hello?
Rajesh. Yeah.
So I want to know how secure this platform is, right? Because you're basically putting up your entire network here, right? So
it is the most secure way.
It
It is the most secure way today available to transfer your financial data. Most secure way. Why? Because understand, if you are aware about how the PKI works, you know about PKI, public infrastructure? Have you heard about that?
No.
Okay.
No.
So what happens, as I mentioned earlier, account aggregator cannot look at your data, right? Account aggregator can only use your consent to deliver the data to FIU, right? From the FIP. So let's assume you are entering your account aggregator ID, which is in this case looks like this. Look at the account aggregator ID in my account. Can you see? This is the account aggregator ID exactly looking like VPA in UPI. You agree?
Yes.
Yeah. Okay.
Yeah.
So when you enter this ID in, let's say, as I mentioned in our example, look at this example again, right? Look at this same example where Axis Bank is my bank, HDFC Bank is from where I want to take a loan, right? And FinView is my account aggregator. So what I am doing is that I'm entering that VCP at the rate one money, for example, in Axis Bank application. This is, of course, loan application that I'm taking, right? So this is in fact wrong. I have written this is HDFC, by the way. This is HDFC Bank loan because I'm taking loan from HDFC. So HDFC Bank loan application. This is where I need to enter my VPA, right? So once I enter this in HDFC Bank is the FIU because they want to use my information. Right? They want to use my information from my bank account, which is FIP, Financial Information Provider. So they want to take from there, which means that this request, when it comes, it goes to account aggregator. You agree? Account aggregator receives the request from HDFC Bank that they want to consume data from Axis Bank. And when you approve it, nobody else in the world can look at the data but HDFC Bank because it is signed by the server. That's the reason only HDFC Bank can look at your data, nobody else can look at your data. Are you now clear on this workflow?
Yeah, this is clear. This is about sharing information, right? But whatever information is aggregated and is available on the platform, can anyone access that and look at the data?
That then depends upon the security maintained by that platform. So let's say 5money, you are using 5money and 5money is aggregating, right? So once it is aggregated, once it is with 5money, how 5money stores that data, how they secure the data is 5money's thing, right? So that is where you need to trust 5money. So if you trust 5money, because 5money is a large company, they are backed by multiple different, let's say, large VCs. They are the ex-Googler, which means that they were earlier working Google and they have started this company. So it depends on your due diligence on that company. Frankly, there is no right or wrong answer to that. So if you trust the company, you will continue working with them. If you don't trust the company, you will not allow them to, first of all, aggregate your data.
But they are not regulated, right?
They are regulated in the sense that, okay, so they are RIA, Registered Investment Advisor. 5money is RIA. So from that perspective, they're regulated on whatever they do, right?
Okay, got it.
Okay. Any other question, anyone? Before we move on.
Yes,
So
Kaivalya here.
they
So
are
while this is I mean, it's a security question.
Yeah.
While the framework got evolved here, or RBI has adopted it, and it looks to be working reasonably.
Yeah.
At high level, what are the concerns that the other matured economies are not adapting?
No. Mature economy have some other form of question, by the way. In India, you have the legal structure around it. So if you look at globally under European Union, for example, right? So you have something called as a Payment Service Directive 2, PSD2. So if you Google PSD2 and look at how they work, you will understand how they try to share the data, right? In fact, in India, you have a proper legal structure and consent artifact blessed by RBI, which is amazing, right? So in India, you have one level next to the what you have in European Union, frankly.
So, sir, we can correct him basically saying that India is a matured economy, at least for this purpose, not the West.
Yes, interestingly, you will always find at least in payment, India is much ahead. Okay, believe me, India is much ahead in payment. And now when it comes to DPI, DPI is a digital public infrastructure. Okay, so India is number one today in DPI. Next comes Estonia. Estonia, you might be aware about, right? So next is Estonia. But understand the contrast. Estonia is such a small country, so they can do all those things. But in India, despite being such a large country, India is able to be at number one. Is amazing achievement.
So it's a legal framework that is the differentiator.
Legal framework and a regulator giving you the consent artifact. So if you look at this is the RBI's IT arm, right? So regulator is telling you what kind of structure and API specification. You can see all those things here, by the way. But I'm saying if you are interested in technical aspect, you can go through this and you can exactly see RBI is saying, okay, look at this structure. This is how you should approve it. Just to give you an example, right? So let's look at this. Look at the XML file. So these are the FI types. Let's say we look at RBI regulated deposit. So RBI tells you exactly that within this document, look at this, what kind of schema you need to have, what kind of data should be there, right? So deposit version 1, what are the main element? Account holder, holders, spending, profile, summary, transaction, transactions. Then within simple types, you have holder Aadhaar, holder email, holder PAN, whatever, right? And then within that attributes, linked account reference, marked account number, type, version, address, KYC compliance, date of birth, email, landline, all these things, guys. So this is at the level of this detail, regulator has worked with the ecosystem to ensure that this is how the data should flow. Every regulator is involved, by the way, that way. If you look at, this is by RBI, the regulator is SEBI, then RBI and SEBI works together to look at what kind of data should come under SIP, equity share, etc. Right? So this is the level at which it is available in India. Not many people are aware, but you should know. This is where India is much ahead of the other countries. Clear? Yes, I think
yes.
You also had a question and you were trying to ask that earlier. Okay, looks like that question is also answered. So with this, I'm sure you guys are now aware about the FIU, FIP and overall account aggregator framework. So if you don't have any question on account aggregator, we will move on to the next one. Okay. Let's look at the next one. Now, of course, everything what I'm telling you is already part and parcel of this presentation. Like everything you can see as a part of this presentation, but I'm going to contextualize this for you so that you don't need to really worry about going here and there. Right? But of course, you don't need to worry that what if I'm not able to remember this? Don't worry, everything is there as a part of presentation. This will be shared with you. You can always go through all of these links which are shared and understand the business model that they are using. Coming back to this. So we have covered so far first account aggregator. And the overall what we are going to cover as a part of this class, at least, is to understand, right? So we have time till officially 1 o'clock, so 1:15, for example. So in the next 2 hours exactly, we are going to learn 3 major areas, right? One is DPI, which is what we are looking at right now. And then payment and lending, how those things will work with you. Because most of these CFOs are going to work with payments and lending. And then mainly on the wealth side. InsurTech, you can go through on your own, frankly. But wealth is very, very critical for you. So we will look at these 3 different areas. DPI, payment and lending, and finally, wealth. Okay. So account aggregator we have covered. Now OCEN and ONDC. Anyone here have like you have heard about OCEN? Anyone? What is OCEN?
No.
No one knows. Okay, interesting. So let us understand the concept behind OCEN. OCEN is open. Okay, so let me tell you in a way which is very simple for you to understand, right? So Open Credit Enablement Network. Open Credit Enablement Network is a network where people can have a layered approach on how the loans can be given. It builds upon account aggregator framework. It builds upon UPI framework that we already have. And then it tries to create an architecture using which people can get loan very, very quickly and in a cost-effective manner. So if you were to just imagine how this will work in a real-world scenario, look at this in a simple manner. Right? Let's say I want to give loan of 500 rupees. Today it is not possible because cost of operation, which includes cost of finding the right suitable loan candidate, doing the due diligence, doing the cost of collection, cost of managing that loan, itself is going to be like 100, 200 rupee. So I can't give 500 rupee loan without charging like insane amount of percentage interest rate, right? I can't justify giving 500 rupee loan. But what if I can have cost of loan reduced to 5 to 10 rupee? Yes, then I can do that. Because then I can say, okay, 5%, 10% is the cost. Then still I can think about something, right? It is like 1% cost now. Earlier it was 100 rupee, 200 rupee, which is easily 20, 40% cost, which I can't really pass on. But now it is 1%, 2% cost, which I can pass on. How does that really work? So OCEN is a framework similar to Samati. You have Credol as a website, credol.org. Credol. Yeah, okay, they have changed the name to OCEN.dev. Good. So if you look at on their own demo and everything, right? So you will see that they have released the new framework also, OCEN 4.0. Okay. So what happens here? I will show you a very simple presentation that they have. Let's directly look at the layers that they are trying to use. Okay. So this is what they are looking at, the layer. Outer layer is a digital public infrastructure where you have BBPS, UPI autopay, Aadhaar eKYC, public credit registry. This is something new that they are creating. Public credit registry. I will come to that. Then open APIs for loan offers, e-sign DigiLocal. All these are the first outer layers using which people can now directly connect. And interestingly, everything that you see in the outer layer, right? Everything that you see in the outer layer is available to everyone using the partnership under what we call as the API Setu. This is Government of India's initiative, API Setu.gov.in. Get access to thousands of API. This is the curated API provided by the governments, different state governments which are there. You can see the directory here. Search for API by organization type, central government, state government, industry, and private sector. Then you have category. You have education, learning, banking, financial services. So let's say you click on this. So within which you will find insurance-related APIs, Aditya Birla, CAMS. This is where you are getting your different financial information, right? So all these APIs are available under one umbrella via API Setu. This is government's initiative, by the way. So going back to what we have here, this outer layer any which ways is available to you via API Setu. API Setu also provides something which is recently launched and not many people are aware about it, which is called Meri Pehchan. Have you ever used Meri Pehchan? Anyone here? Have you used Meri Pehchan?
No. Heard first time.
Oh, so you know, you typically when you sign up to any website, you have option to sign up using LinkedIn, Google, right? Yes or no?
Yeah.
Have you used that?
Yes.
That is what we call as a social sign-on, right? Social sign-on, which means that you are using social media account to sign up, right? Where your data is not directly shared, but it just says whether you are having a valid account with social media, yes or no. And your email ID only is shared, nothing else. Similar to that, Meri Pehchan is a national single sign-on. National single sign-on means that instead of using Google or LinkedIn to sign up, you can use Meri Pehchan to sign up. And Meri Pehchan will share, based on your consent, it can also serve as a KYC portal. Because whatever you store on DigiLocker is available for you to share with the service where you are onboarding yourself. So today, let's say have you tried Credit Garage? Anyone? Credit Garage? Do you guys know about Credit Garage? Have you heard about Credit Garage?
No.
Okay, so Credit, you know the Credit application, right?
Yes.
That we heard.
Yeah, so on Credit, you have this Credit Garage where you can have your vehicle detail maintained. And to onboard yourself to that vehicle detail, they are using Meri Pehchan. So when you sign up using Meri Pehchan, your RC detail and your RTO related information, basically your license, driving license, is automatically fetched. And then automatically they will come to know about whether you have some challans in your name or whether there is a vehicle service due, all those things. Are you guys clear? Just go through this website, meripehchan.gov.in. I'm giving you guys 2 minutes to go through. Just go through this website. I have given this on the chat window as well. Just spend 2 minutes on this.
So this Credit Garage is similar to M-Parivahan? Hello?
Yeah, it is very different from M-Parivahan because M-Parivahan will share data on DigiLocker. You got my point?
Because in M-Parivahan, at least we are able to store and see the RC as well as driving license.
No, but that again I'm telling you now. So that is one provider, right? So on DigiLocker, you know, all the providers are available, correct? So DigiLocker, have you used DigiLocker?
Yes.
Yes.
On DigiLocker, you can basically import everything, right? From your, let's say, insurance copies to your your vehicle details, RC details, let's say, or your driving license. You can fetch all those things on DigiLocal directly, right?
Yes.
They are the providers on DigiLocal. So Meri Pehchan is a single sign-on using DigiLocal. Okay. So you will be having every detail, not only Vahan related detail, but also, as I say, right, your mark sheets, your let's say COVID related vaccination certificate, everything. Okay, so have you guys gone through this?
Yes.
So if you look at the future is amazing, where let's assume you are trying to apply for a loan, right? Or let's say you are trying to apply for insurance for that matter. All you need to do is just sign in using your mobile number, which is linked to your DigiLocker. So indirectly, everything is linked to Aadhaar. Ultimately, everything is linked to Aadhaar. Okay? So using your DigiLocker, you can pass on certain KYC document while you are signing up. Just imagine, right? And using that, you don't need to then really worry about onboarding the customer as a fintech company. You don't need to worry about onboarding the customer and doing KYC separately. When the user is signing up, at that point in time only, the KYC also is done. Just imagine, right? So the time taken and the friction which is there is removed. Easily, you can just link everything together. Right? So India is the third country which has this sort of national single sign-on available. Again, other two countries are, one is Singapore and another one is Estonia. India is third such country, but being the largest country, of course, India has to think about so many different things. So Meri Pehchan, before they launched, they had to test it out on multiple different areas, and then they released it.
Sir, we have similar setup in the UAE as well, which is Sync Pass, which is UAE Pass.
UAE Pass, I know, but UAE Pass is not exactly equivalent to Meri Pehchan. I will tell you the difference, right? UAE Pass allows you to link certain things. That is fine. It is similar to Aadhaar, right? UAE Pass is similar to, but a single sign-on means what, right? Can you sign up for any service, using UAE Pass, where the information will be provided by UAE Pass for your onboarding? That is the difference.
Yeah, so nowadays, like for all government kind of things, it's like you can sign on with UAE Pass.
There's a difference. Government related stuff, right? Exactly.
Yeah.
I'm talking about private. This is, as I said, Credit Garage, private, right? Similar to that, even LinkedIn. Few months back, LinkedIn had this option. I don't know how many of you have seen that, right? You might have seen verified option, verified profile option, right? Let's say my profile on LinkedIn. Now they have removed it, but LinkedIn had that verified option. Yeah, you can see this verified. Vikram has verifications, right? So you can see Vikram has verification, verified identity using government ID. Can you see this? This was done. Yeah. This was done using Meri Pehchan. Got it?
Right.
So this is the difference. This is the difference I'm trying to do. Yes, UAE has that. That way, the linkage wise, you can say there are many countries which provide you this kind of linkages, right? For government related services. But Meri Pehchan is beyond government. This is available for even private player to utilize.
So, sir, do you mean that Singapore has Sync Pass would be equivalent to Meri Pehchan?
Yeah, SyncPass is equivalent to MaryPayChan because SyncPass you can use even for non-government, and SyncPass has a similar approach where you can fetch the data and document. That's why I'm saying it is similar.
Yeah.
Estonia also
Okay.
has a similar thing. They call it X-Road. So in Estonia, you have something called as a X-Road. Okay. So they have this interoperability service called X-Road.
And after logging to this MaryPayChan, so many apps are showing that then we need to allow each and everything wherever required.
Sorry, MaryPayChan, you can directly go and use on their website. MaryPayChan, as I mentioned, is going to be there on some other service, right? So here you can log in, but understand this, you can log in with DigiLocker and MaryPayChan, that way you can make it work. But typically MaryPayChan you will use on some third-party website. You got my point?
Okay.
That is the main power of MaryPayChan. Here you can sign in and you can see whatever your documents are, but that is not the use that you want to look at. You want to look at the use case where you are on some third-party user journey, and when signing up, you are signing up using your mobile number, even though you don't have account with them. But using MaryPayChan, you can sign in and you can even link certain documents when getting signed up. Got it?
Okay. Okay, sir. Thank you.
Okay, so we digress, but this was required. Why? Because MaryPayChan is very useful in OCEN. So coming back to OCEN, when somebody uses OCEN as a framework, this is a framework. Somebody uses OCEN framework, you have access to this entire digital public infrastructure available. That is the outer layer. Then you have the inner layer, middle layer, where you have market innovators building services, right? And OCEN will sit here, exactly this area, open APIs for loan offers. So how it really works, let me just show you in a very simple manner. So let's say you have network of lenders. So your banks, NBFCs, P2P, NBFCs, P2P lending companies, and other lenders. All these are the players who are there. This creates the lenders network. I repeat, this is what we call as a lenders network. Now, this network is already there today, but they don't come together typically. They are there in isolation. OCEN creates the structured network of these lenders where all of these lenders have one single dashboard available via OCEN. Okay, that is the main difference. Next, we have what we call as a LSP, loan service provider. Now, typically, in the traditional sense, you have DSA agent, right? Direct selling agent, or you have BC, business correspondent, who typically sells the loan, right? But under LSP format, it is the opposite. LSPs are the brokers, not the agent. They are the brokers on behalf of the customer. They can work with the lenders network. Now, let me give you an example of this, right? I will give you two examples. One is B2B example, another one is B2C example. So Tele, which is ERP system, this is an example of LSP who is in B2B side. So what we looked at here, where Tele giving you an option to discount your invoices with the lenders network rather than only with your own bank. Now Tele can provide you to discount your invoice or allow you to have a purchase finance using any of the banks on the network. So Tele will become LSP. Similar to that on the B2C side, you have, let's say, Swiggy. Now Swiggy has delivery partners who are working with Swiggy. But if delivery partner wants loan, Swiggy has the data related to their performance. Swiggy themselves will share the data in what we call as a public credit registry. This public credit registry will not only contain your credit score in the traditional sense, because DP, delivery partner, may not have credit score at all. So public credit registry will include anything and everything which might be useful and helpful for making credit decisioning. So in this case, Swiggy is already having data around DP. So Swiggy can share that data with the public credit registry. DP can further authorize certain other players. For example, delivery partner is making payment of, let's say, electricity bill. So delivery partner can authorize electricity bill provider to share that data also under public credit registry. Delivery partner can do it. And this public credit registry data then can be used by the lenders network to decide on whether to give loan or not. Right? In this case, whether to give loan or not, that decision will come to Swiggy, because via Swiggy, delivery partner is applying to lenders network. So Swiggy will receive that, yes, whether this loan is approved at what rate. And if, let's say, more than one lender is approving, Swiggy will show all the options to delivery partner saying that, look, there is a bank A which is giving you loan for 1 year, but the interest rate that they are charging is 12% or 15%. Bank B is giving you loan for 2 years, but the interest rate is 20%. Now delivery partner can decide. This is where the entire framework really is helpful. Are you guys clear with this?
Yes.
Yeah.
Yes, sir.
Can you see the advantage here? The cost to give 500 rupee loan is negligible. Why? Let us look at very quickly what are the typical cost. Cost of finding the customer. Cost of doing due diligence. So I will just write DD. Cost of collection, which includes sending reminders and collection, right? If you look at all these three costs in typical sense, right, this will total up to around 150 rupees per borrower on an average, by the way. Traditionally, this is the cost. But with this framework, understand, first of all, there is no cost of finding the customer. Why? Because banks and NBFCs are not the ones who are searching for them, right? In fact, they are themselves coming to banks and NBFC. Don't you agree? Via the LSP, they are coming to banks and NBFC.
Right.
So this cost is zero. Cost of finding the customer is zero. Second, cost of doing DD. You don't have enough data to look at the due diligence itself. And now, because the data is coming by LSP in the public credit registry, cost of doing DD also is very low because everything is now digital. So this becomes, let's say, maybe like 5 rupees, right? Cost of collection using your UPI collection mechanism. You can automate this entire process again at 5 rupees. UPI mandate is 5 rupees in cost, by the way, if you don't know. So now suddenly from 150 rupees per borrower, you have gone down to 10 rupees per borrower. And because of that, suddenly 500 rupee loan is a possibility now, which otherwise is never a possibility. Are you guys able to understand the difference? Earlier, 150 rupee, you can't justify 500 rupee loan. You can't even justify 1000 rupee loan because it is 15% cost, right? But with 10 rupee, you can justify 500 rupee or 1000 rupee loan because it is let's say 1 to 2% of the cost or disbursement. Are you clear on this? Any questions? Okay, this is clear to you?
Yeah.
Yeah.
Okay, great. Let us now look at ONDC. I hope everyone knows about ONDC at least. Have you heard about ONDC?
Yes.
Okay.
Yes, sir.
So what in your ONDC does?
So it gets all buyers and sellers on
Aggregation.
on one platform.
Okay, Ashwin is saying does not know. Not an issue. We will look at it. Buyers and sellers are able to connect. Okay. What else?
So you can do price discovery better because you have access to many different sellers at one place.
Better price discovery. Okay, what else?
So it is basically like number portability what has done to mobiles. Here you don't have any monopoly of the Amazon or Flipkart or everything. Even they are also part of it. But democratize basically, if I use a proper word.
Answer. Very good. So let us look at now. Himanshu is not no commission platform by the way. Let me break it up to you that it is not a no commission platform, but we will see how it is different. So first of all, let us try to understand what is ONDC trying to solve, what problem they are trying to solve. Okay. There is what we call as a paradox of marketplaces. Have you heard about this paradox of marketplaces? Anyone knows about what is that paradox?
The user unable to identify between a lots of marketplaces.
No. So first of all, ONDC is trying to solve paradox of marketplaces, which means that the paradox here is that which one should come first, right? For any marketplace, you require buyer and seller. You agree? To create a new marketplace, you require buyer and seller. Don't you agree?
Yes.
Everyone agrees on this statement?
Yes.
But who will come first? That is a paradox. Who will come first? Let's say you focus on buyer. You go first with the buyer and say, okay, I am creating a new marketplace. Are you interested? Buyer will say, oh, who are the sellers? Right? You go to sellers. You say that I'm creating a new marketplace. Why don't you join? Sellers will say, why should I waste my time? How many buyers do you have? Don't you agree?
Yep.
So who will come first? You need to always think about that. So people will try to do this simultaneously, right? Saying that, okay, I need to onboard buyer as well as seller. But this is where the marketplace often cannot even start. And that's the reason you have monopoly and duopolies in the marketplaces. Because once you have a large enough marketplace, the network effect will ensure that you have a monopoly. It is by design. It is not as if that monopolies are created, but it is the emergent behavior itself that will create a monopoly. Because if you are a new seller, what will you do? You will not go to a new marketplace. You will go to a marketplace which is well established, correct? And because as a new seller, you will go there, even the buyers will need to go there only. Which means that once a marketplace is well established, they will create a monopoly. And it is by design, by nature. So to solve this paradox of marketplaces, you need to create something where the marketplace creator will need to focus only on one side, not both the sides. Otherwise, this paradox will not be removed. So what ONDC does is beautifully, they are saying, look, I am creating public registry of all the sellers, open public registry of all the sellers, which means that to create a new marketplace, you just need to focus on the buyers, not on the sellers. I will take care of sellers. I will create a unified, universal public registry of sellers so that to create a new marketplace, you guys just need to focus on buyers. That is what ONDC is truly solving. Okay. So what ONDC does, if you look at ONDC website also, you have multiple different players on ONDC. So if you look at network participants, right? Let me show you ONDC participants. On that, you have a network participants. Look at them. You have live on the network, different participants, seller network participant. So these are the participants who are given only one task, onboard sellers, nothing else. So these are the partners who are then just bringing sellers. Look at this. They have only one job, to bring sellers. Then you have buyer network participant. They have only one job. They have job to only bring buyers. So as a buyer front end, you will only see them, by the way, right? So you will not be able to see the seller participant at all because they are invisible to you. As a buyer, you will visit buyer application, right? You will visit buyer side application. You will not look at seller side application. Within the buyer network participation, you also have two different subtype. One is business to customer, where people like you and me will buy, or you have business to business. So you have infra market kind of a business where it is meant for business to business. So you can clearly see that seller network participant will onboard the seller and buyer side will onboard the buyer, which becomes amazingly well for creating a new marketplace without worrying about how to onboard different player. Are you guys clear in the first place? Why ONDC is there in the first place?
So this is for all commodities?
For every commodity, including finance, okay? Finance is a very specific area where, understand the difference in finance versus any other commodity is that under finance, seller network participant are regulated entities. You got my point? Seller has to be regulated entity under finance. So if you look at ONDC financial services, here it is. So they are starting with credit, insurance, and investment. So if you look at on the credit side, look at this. Sample journey, GST based invoice loan. Right? So if you look at their sample journey on Figma, you will see how they are envisaging the entire end-to-end journey. Let me zoom a bit. Okay. Yeah. So you can see this demo, right, on this. You choose your language, create account. This is the entire flow that they have generated. Right? So this is also coming very soon on ONDC, by the way, which means that ONDC will also allow people to create a marketplace, using the existing infrastructure. You don't need to really create a new infrastructure at all. So you can start selling loans because you don't need to have a license. Banks are having license, right? But with ONDC, you can start creating a marketplace for loan or marketplace for insurance product. So this is like directly fighting likes of Insurance Dekho or Policy Bazaar, Bank Bazaar, right? Because they have created the marketplace. But now they are in a monopoly, right? But somebody else also can now create a marketplace without worrying about how to partner with all the banks. You got my point? Which becomes very useful because now anyone can create a marketplace. You just need to have a buyer side version cracked. Right? You need to find enough and more buyer. So if you have your buyer side figured out, you don't need to really worry about how we figure out seller side. That is done for you. Are you clear on this? Any questions whatsoever on ONDC?
No, sir.
Somebody said it is a commission-free marketplace. Let me correct you on that. ONDC is not commission-free marketplace, Himanshu. They will charge commission, but it will be much, much lower than the traditional marketplace. For example, Amazon charges anywhere between 25 to 45% commission. ONDC, on the other hand, will charge anywhere around 8 to 15% commission. 8 to 15% commission because they also need to give that commission is divided across all the other players. So let me show you which are those players, right? These are the players. So buyer side player, seller side player, and then ecosystem participants like technology service provider, reconciliation service provider, settlement agency, online dispute resolution service provider. So anywhere between 8 to 15% that they charge will get divided across all these people. Are you guys clear? So that's the reason there is a charge. It is not like it is free, but it is much, much lower than the other marketplaces. Are you guys clear on this?
Yeah. Sir, I have a question.
Yes.
So, are there buyers also on this ONDC platform or only sellers?
It is very, I'm not able to clearly listen to you. Is it only me or there is a lot of noise coming behind?
Yes.
Sir, my question was, are there buyers also on the ONDC platform or is it only sellers?
As I mentioned, you have, this is a network, and this is open network for digital commerce, right? So you have the participants who will only work on buyer or only work on seller. You got my point? Let me show you one more time. Can you see network participants? You have buyer network participant, which means that, let's say Paytm. Let's start with Paytm. So Paytm can become buyer side network participant as well as seller side participant because Paytm also works with seller. Don't you agree? You got my point. So Paytm can act as buyer side as well as seller side. But on the buyer side, if it's working on buyer side, not only Paytm will have access to all the sellers that Paytm has onboarded, but also any other seller who's there via ecosystem. So let's assume Amazon has onboarded some seller. Paytm will have access to that seller as well. You got my point? What is the difference here?
Okay.
Typically, what will happen? Paytm will need to take effort to onboard a seller, and then Amazon may also have the same seller. Who knows, right? But here you have the complete repository of all the participants, whether it is seller or whether it is a buyer. You have the complete registry, which means at least on the seller side, you have open access. Buyer side, you don't have open access. Why? Because buyer side, you have put extra effort to onboard that buyer. So what ONDC is saying, you fight on the buyer side. You fight on the marketing side. But seller side, you don't need to fight. Today, if I want to create my new marketplace where I want to sell interior decoration item, right? I simply can create a filter that whoever is selling interior decoration related item, I want to show on my marketplace, right? So that part is figured out. I don't need to onboard seller for that because all the sellers who are there in the registry will be available for me. Got my point? But I need to go ahead and do marketing for buyers because that is where I need to fight with the market. Clear?
Okay, understood. So you have to get the buyers, right?
Yeah, I will just focus on buyers. I will get buyers only. Sellers are already there in the network for everyone. Understand that. But buyers we are fighting for. Who will use which application, right? Somebody may also have created interior decoration website. So they will do more advertisements, so more people will come to their website. While the seller set is same, by the way. Understand the difference, right? Same set of sellers. Clear everyone on this? Shall we proceed?
Yes.
Okay, so in next 1 hour, we are going to look at, so these were the major digital public infrastructure that you should know about. So we have covered it. Now we will move on to payment and lending side. Very, very interesting. New products only. Something that you don't know about. And it is very useful for you. So first and foremost, we will look at under payments. UPI 2.0 related features. Sorry. Have you heard about UPI 2.0 related features? Anyone over here have used it?
No.
Okay.
No.
You have not used it. Not an issue. We'll look at that. So if you look at, there are four major features in the UPI tool. Okay. So this is that official website. I'm sharing this URL for your reference later. Look, you have four major features under UPI 2.0. One is linking overdraft account on UPI, which means that even if you don't have enough balance in your account, you can still make a payment using the UPI overdraft facility. This can be activated automatically once you give the consent for overdraft and bank has allowed your account under overdraft facility, then automatically it will activate the overdraft facility and you can still make a payment even though you don't have balance in your account. This is first feature. Second feature is signed intent in QR. Now to understand this specifically, you need to understand the security issues which are there. Not many people are aware about those security issues, but let us try to understand what do we mean by this security related issue. So let's say PMK's QR code. So this is the official PMK's QR code, right? Can somebody scan and verify? What do you see when you scan this? Just scan this and you can use whatever, Google Pay, Paytm, any other application that you use.
It showed PMKS and the blue tick is there.
Correct. Which application you are using?
Paytm.
Paytm. It is showing blue tick and perfect. Anyone, you can also
WhatsApp.
GPay or WhatsApp.
In GPay, PM cares at SBI, it is green tick.
Correct. Green tick. Understand this differently. Green tick. Not that down, right? Green tick. So what happens is that not many people are, however, aware that let's say I download this image.
In ICICI, it is not showing any green tick. It is simply PM cares at the rate.
Yeah, so it depends on application which you use, but look at the difference by the way. So let's say so I'm just scanning this QR code that we have using this online facility. So here we go. So we have this QR code now. And can you see this is what is mentioned within the QR code, right? So first of all, it is what we call as a protocol. Similar to HTTPS, can you see it is a protocol? So UPI is what? UPI is a protocol. Understand that difference by the way. UPI is a protocol. Similar to HTTPS, it is a protocol. What is the action that it is taking? It is taking the payment action. To whom I am trying to pay? Payee account is PM Cares and SBI. Payee name is PM Cares and merchant category code under the ISO 18045. Merchant category code is 9405. By the way, you can Google merchant MCC code, right? And this is ISO 18045 standard code. I think it is 045 or 245. ISO 18245. Yeah, 18245 merchant category code. So based on that ISO, that merchant category code is mentioned, which is very, very useful by the way. I will come to that later. So coming back to what we were doing. What if I copy? Can you see the last part, which is sign? Can you see the sign part? Is it visible to everyone?
Yes.
Yeah. So this sign has some utility. We'll come to that later. Let's go to some QR code generator. Okay. Can you guys scan this QR code now and see what do you see? Still it's the same thing. Still the green tick and everything is coming, right? Because we have not changed anything. It's the same thing. Are you still able to
Yeah,
see?
same thing.
Okay.
Same thing.
Now let us assume that we don't change pay name, but we change this part. This is what you are changing. And we already have somebody's VPA ID. So we will look at them. So let us look at, again, somebody can provide your VPA, VPA. Ashwini, I will use Ashwini's because Ashwini has provided. We'll look Ashwini at the rate OKHDFC. Okay, now scan this and see what happens.
No, could not load banking name. Only PM cares coming.
Yeah. Try using different ones as well, right? Some application will not allow you to scan. Some applications will allow you to scan. And it will now, at this point in time, will not show you green tick. So you can try Google Pay, for example. On Google Pay, what do you see? PM cares, right? On Google Pay, it will...
PM cares and nothing is coming.
Yeah. So you can by mistake make a payment, correct? It will not go to PM cares.
Yes.
It will go to Ashwini, correct? But this time you can't see green tick. Are you able to see green tick?
No.
Why it is not coming? Because the signature is invalid now. Because I have modified this data, the signature which is applied to that is invalid. That's the reason you will not see green tick.
Okay.
So UPI 2.0 feature, which is this sign intent and QR, helps you with that fraudulent mismanagement of QR code, right? Because people on social media specifically, this major general has wounded in the battle. Please donate. And you will see QR code with army logo. And you will see, okay, it looks like it is a real army QR code. No, it is not. It will go to some random user. You got the point? So you need to be aware about this thing. Unfortunately, not many people are aware about this, but you need to be aware about this. So in order to save people, the sign intent and QR is there, but you can see still some of the applications are supporting modified version. Why do you think it is allowed? Why do you think it is still some applications are allowing the tempered QR code? Any idea?
No.
No. Security wise.
For the purpose of interoperability and supporting the old QR codes, because UPI 2.0 came recently, right? Like recently, when I say it is still 2020-21. While original set of QR codes were created and installed without any signed intent before 2021, almost 80% of the QR code that you see today were issued before 2021. Don't you agree? Which means that applications will still need to support the old QR codes. And in old QR code, you don't have signature, you don't have sign. So to support those QR code, you still need to read those QR code, right? That's the reason. So people can simply modify and remove this sign. But still, this QR code should be supported. Don't you agree? And that's the reason this happens. So as a security mechanism, many applications like, let's say, if you look at Paytm, PhonePe, not the Google Pay, by the way, but PhonePe, Paytm, these are the applications which will automatically fetch the real name, not the PM cares name, but real name based on the payment address. So even if you keep PM cares, it will not matter because it will fetch the real name based on the pay account detail. The most secure application, by the way, is BHIM. Because whatever NPCI launches as a security measures, immediately it is implemented under BHIM. So if you really want to use most secure application for payment, BHIM is the most secure application for the payment. For UPI at least. With all the features available on UPI. Okay. In case you don't have that application, I would strongly recommend you to download and install that application for your benefit. It has all the features that UPI has to offer to you. Clear, everyone? Are you able to relate to this?
Yes, sir.
This kind of fraud you might have seen, right?
Yes.
Okay, so signed intended QR, you are clear about, then mandate, UPI mandate. This is where you have two options. One is what we call simply as a UPI auto collect, where you can specify up to certain amount, you are authorizing bank to automatically debit your account. For instance, what happens with your maintenance bill, right? Society maintenance bill. Normally, it is in the same range. Don't you agree?
Yeah.
Normally, it is the same range. But unless and until you have some special collection, like let's say some repair cost, right? Or some special celebration expenses. Otherwise, it is the same. Correct?
Yes.
So traditional standing instructions will not support that kind of a thing because it has to be a constant amount. Don't you agree? But UPI mandate can allow up to certain limit, which means that you can create a mandate if your monthly maintenance bill is, let's say, 10,000 rupee. You can create mandate for 11,000 rupee. Mandate up to 11,000, which means that any amount up to 11,000 is allowed. It can be lower than 11,000, but any amount up to 11,000 is allowed. Sorry. So when you look at this mandate, once you authorize and your society can directly raise the request on that mandate. Unlike any other payment mechanism, there is zero deduction or zero fee on this collection. The society is happy because society otherwise will not allow you to make payment using digital means, right? Society will require check. But because there is no amount deducted, society is happy. And it is a standing instruction effectively. So society can also keep on sending the bills and it is honored automatically. Similar to that, you can have a other type of mandate called ASBA mandate. Do you guys understand ASBA is a word? Have you seen ASBA in practice? IPO, right? And under IPO, what happens? When you apply for shares, your amount is blocked in your bank account, but not debited. Do you know that?
Yes.
That is ASBA facility, which means that your account is blocked by that amount, but not debited. So in case, let's assume you have applied for 100 shares and in allocation, final allocation, you are getting 20 shares. So only amount up to 20 shares is then deducted from your account when the allocation has happened, not when you are applying. If there is no allocation which is happening to you, everything is released again, right? So that block which you had is removed. Similar to that, even UPI allows that facility where you can hold that much amount in your bank account, in somebody's bank account. So rather than using credit card as the authorization framework, you can use bank account as authorization as well. Typically, credit card allows you to lock that amount, right? Unlike credit card, here you know that that amount is already there for sure. Using
So whether this ASBA allows to make the block of money from my OD facilities also.
From any bank account, with OD or without OD doesn't matter. With any bank account, you can block certain amount.
Because I have seen that many times I've tried from my OD account for making the blockage, but it's showing as like you don't have a positive money, so you cannot make the block of amount. Though I can transfer that that amount
Yeah.
from my one account to another account. That's fine. But ASBA is not allowing.
No, so that's what I'm saying. ASBA is different, UPI is different, right? So I'm saying that ASBA may not allow. So why ASBA may not allow you to do that? Because you can use that amount to invest. While OD amount is not supposed to be used for investment, it is meant for working capital, right? So ASBA will not allow you, but UPI mandate will allow you to do that. ASBA was the analogy which I gave, right?
So you mean to say that the if in that OD account I will give the UPI mandate, then it will allow to make the blockage of the fund for the ASBA purpose for this
No, not for
purpose.
ASBA purpose, for
Not for the ASBA purpose.
payment purpose, not for ASBA purpose. ASBA is only for IPO. UPI mandate can be for a number of use cases. So for example, let's say using UPI mandate itself, you can block amount and create something like this. There is an application called Ostra. Let's look at this website. So they have created this new product called, here it is. Innovation in payment, hold and release. So what do? Instead of creating a prepaid card, what they are saying, don't debit your account immediately. In prepaid card, you need to debit your account immediately and amount is there in the prepaid card. Don't you agree? Yes or no?
Yeah.
So under prepaid card facility, you will need to debit your bank account and then amount is lying in the prepaid card. Unless you use it, that amount is not going to fetch you any interest or nothing, right? You agree on that? Here, what they are saying, I will not debit your account. I will give you that much amount that you want in your prepaid card by blocking that amount in your bank so that it is not debited. After 1 month, let's say out of 10,000 blocks that you have done, you have spent 3,000 rupees, which means that I will, at that point in time, after 1 month, I will debit your account with 3,000 and release 7,000. Got it? At the end of 1 month. But what is the benefit that Ostra is getting? So Ostra is able to charge 2% transaction fee or MDR as we call it from the merchants. That is the revenue model. They are not making revenue from you, but they are giving you incentive to use Ostra because your account is not debited immediately, unlike prepaid card. Got it?
And this amount, because the OSTA will get this securely this amount from us because they have blocked it.
Yes, correct. So you know buy now pay later, BNPL. Have you heard about BNPL? Buy now pay later means that you are getting effectively credit-free period for 7 days, 15 days, after which you need to make a consolidated payment, right? So buy now pay later is taking indirectly a credit risk on you. What if you don't pay, right? So buy now pay later is taking that risk on you. But hold now pay later, this is what we call as a HNPL, hold now pay later. They are not taking any risk on you because the amount is already blocked. If you don't pay, amount is debited from that block amount. And you are not given amount more than that any which ways. Got it?
Yeah.
Clear
So
everyone?
here in OSTA, so we have to give the UPI mandate, yeah?
Yes. You are creating UPI mandate with the block. UPI mandate with the block is what you are creating.
And we have to give the like 1 lakh rupees for the mandate that the
No,
this
1
can
lakh
be
rupee.
blocked.
Whatever amount you want to spend, that's it.
Okay.
It is kind of a virtual wallet, right? What effectively you are creating is a virtual digital wallet. Think like that. So under Paytm earlier you need to send money and then you can spend money under Paytm. Here what you are saying, no, I don't need to send money from my account. I still have amount in my bank account, which I am using to create this virtual account, right? Where amount is not debited, but they are giving you that facility where you can still make a payment. Because
And they are also having a period like other credit cards.
No, this is not a credit card, by the way, right? This is similar to let's say creating a credit card, but this is not a credit card. You are not given credit directly, but you are able to spend in the partner network.
Okay. Okay.
So they have, wherever your UPI is allowed, they are allowing you to spend.
Okay.
Clear everyone on this? Any other question on this? Okay. So this is another feature which I mentioned. Mandate. And finally, you have invoice in inbox, UNP. So this is where directly in your inbox, you will be able to see a link that, okay, this is the invoice, and you can make a payment using this specific link created for your UPI ID and everything. So you can just click and make a payment done. Or it can be a QR code also, which is there on the bill itself, invoice itself. Are you guys clear with this UPI 2.0 features? Any questions on that?
So the mandate is only created by banking or any person can create?
Yeah, mandate you can. So what happens to create a mandate? You need to have partnership with payment aggregators, right? Payment aggregators and gateways.
Okay, thank you.
Great. Now let us look at some new age solutions, right? Some new age solutions which are available within UPI very recently. And if you look at from B2B perspective, there are multiple different solutions which are coming under UPI. Using UPI, people are creating UPI B2B solutions. So let us understand what do we mean by that, UPI B2B side. You have certain solution providers on a connected banking level with UPI and without UPI both. Bharat Next. Secure business payment with credit card and even your bank account, both. They support both credit card as well as bank account. So why I'm showing you this? So you can use credit card for making your GST payments. And what happens typically, you also have option to make payment using normal UPI or bank mandate. Both, you have option to make payment using both. But because using credit card, you also get reward, it becomes very, very useful. Typically, you know that the invoice, whenever you raise invoice, next month you need to pay GST. Do you guys agree on that? 20th of the next month you need to pay GST.
Yes, sir.
Which means that you are blocking your working capital while the payment may come after 3 months. Correct? Using this sort of services nowadays, you can unlock that working capital partially because they are going to give you 55 days of credit period. So up to that time, you are saving your working capital. Not only that, but you are also getting reward. This is a win-win for everyone. So these services are now becoming more and more popular. Whether it is a proper credit card, which they are giving it to you, or it can be a credit card created by blocking the amount. Let's say you are not credit worthy. If you are not a credit worthy customer, how can I give you credit card? I can't. So what they can do, they can block that much amount in your savings account or whatever, and then they can give you credit card. What we discussed earlier, right? Hold now, pay later. You can use that model to even create a security against your credit card, lien. But typically in India, people create fixed deposit as a proper lien. So that fixed deposit becomes a separate asset. And on that, you can create a legal lien to give you the claim. Any questions on this? Okay, let's continue. So once you have understood this UPI in and out, right? We are going to look at some of this interesting use case on how the payment is connected with the lending. We have already seen some of the use cases, but let us further delve deeper into it. So let us now come to trade finance related domestic international. Let us look at these two options, right? Domestic and international trade finance related solutions using fintech. So how domestic trade finance is getting changed? First of all, you have dynamic discounting. Have you ever heard about this dynamic discounting? Anyone?
Could be volume based.
No, it is not.
No, yeah, dynamic discounting is I have used basically when the vendor wants financing, they are actually ready to pay different interest rate at different time because of their need, and they quote the interest rate, and accordingly the discounting happens.
Perfect, absolutely.
So either you can use your own money or bank money, both are possible in dynamic discounting.
Absolutely correct. Absolutely correct.
Yeah. So, sir, long back we were using this. Even 2015, PV Vendor was one of the vendor providing this service. Then they were acquired by.
I see.
No, this I think largest platform. Sorry, I forgot that name.
Invoice Smart?
No, not Invoice Smart.
No worries. So let me show you guys, right, what exactly it looks like. So you have, this is one such service provider for, let's say, dynamic discounting as well. So our product, you receive pay early dynamic discounting.
Sorry, that was C2FO, sir. C2FO.
Yeah, C2FO, okay.
Yeah.
Great. So if you see, you have multiple different products, which is pay early, using dynamic discounting, payable financing, P-vendor inside. So how does this really matter, right? So let's assume you have two options. I'm giving you two options. You are corporate. Either you can manage your own treasury, or I can help you manage your treasury. Understand the difference, right? I'm giving you two options. Either you manage your treasury the way you want it, or I'm going to help you manage your treasury. Let's assume you are procuring different stuff from your supplier, and you have currently negotiated with the supplier 90 days credit period. Okay. So after within 90 days, you need to make a payment, you know that. But you have excess cash available with you. You have two options. One option is to invest in fixed deposits or corporate deposits, which might be available. Or alternatively, you can do dynamic discounting, where you are allowing your supplier to bid, or in a way reverse bid, okay, on what is that they are ready to forego in order to get payment immediately. Are you able to understand this in a simple words, right? Your suppliers can do the reverse bidding on whatever they are able to, or they are ready to forego if you are making payment immediately. So somebody may say, okay, I'm in the requirement of money immediately, so I'm ready to forego 10%. I'm just giving an example. So that 10% is immediately available to you as a upfront discount, right? So rather than investing in deposit, you are better off paying that amount to that supplier. So platform like Cash Invoice or many more such platforms help you host your own reverse bidding platform for your supplier, where suppliers can say, okay, I want this much amount immediately. I am ready to discount at 5%, 7%, 9%, 10%. They can bid against each other. And whoever is bidding the highest will get paid first. You got the idea? And this discounting, you don't need to also have bidding process. Dynamic discounting allows you to have automated option available, where every day you can see whatever is the current discount available. So with dynamic discounting, supplier knows that if today they want to avail payment, right, accept payment, then they can receive payment at this discount. Are you guys clear with this? Any questions?
Yes, clear.
Is it same a platform like Traces? Sorry,
No.
Trades.
Trades. No. Trades is a invoice discounting platform in a way.
Yeah.
This is much beyond that, right? So this is the reverse bidding platform also.
Okay.
On Trades, I think what you can now do is they allow you to do at a network level option to quote but not bid. I don't think they give you bidding option.
So trades is specifically for MSME vendors, and there it is reverse of this. Bankers are actually quoting the rate.
Correct.
Exactly.
So it's a marketplace. It's a marketplace where you are basically getting rates at which bankers are ready to discount, right? So
Yes,
that's
yes.
what you see. But here, what happens is that as a corporate, you are able to work on this, right? As a corporate. To your supplier itself, right? To your supplier only, you are saying, I will make a payment faster. Okay. Any other question?
So one question that site also shows the average discount offered is 2.2%. I just wanted to understand the business case here because that's the rate you can get even on a current account or maybe short-term fixed deposits. So what's further motivates both the sides to get into this?
No, what you are looking at is that interest rate, average discount rate offered, etc., is on that 80-day, 90-day period, right? So you need to understand that if 2.2% if you are getting on an average 90-day or 45-day period, per annum rate is much better, right?
Okay.
Yes. Sir, dynamic discounting, we were earning up to 18%.
Yeah, that's what I'm saying. It is. So you don't need to look at in isolation, right? That percentage that you are looking at. So for example, MDR, merchant discount rate, you are charging 2% on every payment. Can you compare that 2% with 2% per annum? No, because
24.
that is for every day, every transaction you are charging 2%, right?
Okay.
So you can't compare that way. You can't compare 8% FD rate with 2% charge that you take on every transaction.
No, I was actually looking at 3 months only. I mean, the short term.
Yeah, but I'm saying that even
also
on
at
an
similar
average, it is a 45 day. It is going to be around 45 days, right? Because what happens when you start the program, typically people may look at around 45-day period when they say, okay, let me now discount it, right? Or whatever. So it might be possible. So on an average, I have seen 40-45 days is what you have on an average. If the 90-day period is given, then 50% of that is what typically you look at, right? So even if you look at 45 days, 2.2% multiplied by, let's say, so if it is 180, you look at twice. If it is 45, it is 8 times. Right? So 2.2 into 8 times is what you are typically looking at. Without even compounding in a simple mathematical way.
Got it.
Okay. Let us move on to the next point. Let us look at under domestic player discounting, another concept. Anyone tried this one, deep layer discounting?
Is it for the second level of vendors?
Yes.
If I am buying from X and X has raw material suppliers, they can also get benefit of discounting because the parent or the second level buyer is highly rated, say AAA client.
It's not only highly rated. Normally, you will find this option specifically in the anchor financing. Have you heard about anchor financing?
Yes.
So under anchor financing, what happens is you have, let's say, Tata Motors. Tata Motors are banking with, let's say, Axis Bank. Okay. So Tata Motors, because they are banking with Axis Bank, and Axis Bank knows Tata Motors very well, they have trust on Tata Motors. All the level 1 supply of Tata Motors, let's say level 1 supply of Tata Motors, include someone like rubber manufacturer or let's say steel manufacturer. Don't you agree?
Yeah.
So these are the, let's say, level 1 supplier. But for rubber also, you will have some supplier, level 2 supplier for let's say farmer or someone, right? Let's say steel manufacturer, it will be someone, some ore company, right? Or metal company. So this is the level 2. This is the level 1 supplier. These are the level 2 suppliers. Don't you agree?
Yeah.
So typically what happens today, so far only level 1 supplier can avail this anchor financing because Tata Motors are going to pay ultimately to this L1 supplier. So ultimately the bank who is giving this financing is taking risk on Tata Motors, not on this L1 financier any which ways. Don't you agree? Because Tata Motors are supposed to pay them any which ways. Which means that when Axis Bank is providing this anchor financing deal, Axis Bank is taking this not on level 1, but Tata Motors. Got it? So why not allow even level 2 to take it? If today what happens, this anchor financing efficiency is typically less than 30-40%, because not everyone under level 1 will apply for that, right? But what if you extend that, because level 1 is not opting for this, level 1 can pass it on to level 2. Ultimately, Tata Motors only is payable, right? Like Tata Motors is liable for payment. In that case, level 2 can also avail this facility, or even level 3 for that matter. Who is stopping you, right? Till the time ultimate payment is coming from Tata Motors and the funnel is very clear. So let's say if this rubber manufacturer has given 10 lakh rupee worth of material to Tata Motors, then L2 from whom this L1 had taken supply has billed 2 lakh rupee, and L3, let's say supplier N, has taken 50,000. Till the time this is lower than, this is the funnel which is lower than the one above, it is okay. But what if, let's say this is 5 lakh rupee? Then you will only allow up to 2 lakh rupee. You got my point? While the top is still 10 lakh rupee, but because one level above is only 2 lakh rupee, you will not allow 5 lakh rupee here. You will only allow 2 lakh rupee. Clear, everyone? So this is what we call deep play discounting. There are players available which will support this. For example, you have VFin. Yeah. So they provide these services. Okay. You may not directly find them, but they provide services via some NBFCs or banks or other players. So it is a B2B2C solution. As a corporate also, you can use it if you want.
What does it mean, SCF? Think SCF?
Supply chain financing.
Okay, supply chain.
So are you guys clear with this? Under international, the only change that you see beyond, like, of course, in international, you can't do this. Correct? You can't provide this sort of things international because you don't have the trust chain available. But under international, you can do something beyond the normal stuff, which is what we call as a EUCP automation. How many of you heard about EUCP? No one. Come on, guys. I'm sure you have done
No,
some transaction.
no.
Okay, you know what is UCP, but first of all, remove E, but what is UCP?
Yeah, uniform custom practice, no?
Correct. So, I'm sure that you are aware about what are the norms under that.
Yeah.
Which means that EUCP allows you to automate that those set of rules, automate and convert into electronic format. Okay. So using EUCP automation, using what we call as a insurance on credit, you can reduce the cost of international trade much lower. Right? So let me show you such platforms on that side. So let's say Drip Capital. This is a trade finance for international market as well. Grid capital provides you for importer, exporter, etc. Under this, you have an option for EUCP automation as well, where using EUCP 2.0, EUCP version 2.0, you can go through that, by the way. I'm not going to teach you during this session. But EUCP 2.0 documentation, you can go through this documentation if you are interested. Entire specification is automated. Okay. It is kind of a heavy document, but you understood that this specification which is available is implemented directly so that you don't need to do any manual documentation beyond a point. Once you upload your physical documents, whatever is bare minimum, everything is converted into EUCP, and then entire end-to-end transaction happens on the system itself. So this entire trade finance transaction typically in the physical environment will take 3 to 7 days. With EUCP and all these different technologies combined, it is going to take you few hours, not days, but few hours. Okay. Anyways, you can go through that later.
But sir, I'm still not clear how EUCP will help. So, in international, can you give some better example?
Okay, so I will tell you very
so
simple.
if I am purchasing from China, for example, and currently I am using LC route. So I'm using my banking limits to create an LC, and based on that LC, Chinese supplier is supplying, and I am getting say 60 days credit. Now, how EUCP can help me in speeding up the process or increasing the usance?
Yeah, answer one question. Answer first question.
Yeah.
For LC, what do you require?
LC, we need limit.
That is fine, but even before you get the limit, bank will ask for something, right?
Purchase order.
Purchase order. Okay. So documentation, you require documentation.
Yeah.
Right. EUCP will automate that, and because of that, you will get it immediately. So it is automated. The limit is based on that limit is created automatically, and there is a complete transparency and trust available in EUCP documentation. So if you look at this as a specification under version 2, you will find that so an EUCP credit is also subject to UCP without express information, all these things. On the technical specification, you will also see, look, original copies, right, and required presented. All of the things that you do typically is adhered with even electronic records, right? Now, this is not a technical specification. You are just looking at the simple comparison between UCP and UCP. But if you look at the technical specification, you will understand that you can create the documents, electronic documents, which are compliant with the UCP norms. Okay. Which means that based on that, you can issue LCs.
So banks are participating in this?
Yeah, of course. Of course, banks are participating. Otherwise, how it will be work, right?
Because we were exploring Bolero or similar platforms which are using blockchain. And
blockchain is different. Look, without blockchain, it will still work. What I'm trying to
so
say is that
this one looks better. Yeah.
Understand one thing, even blockchain platforms, like there is another blockchain platforms called Trade Report, right? They have integrated with the UCP, by the way. So blockchain platform does not mean that you don't require EUCP. Blockchain will only ensure that your invoice is tokenized. And if you want, then that tokenized invoice can be subdivided into multiple different people discounting the same invoice up to that amount, right? If I were to give you an example, let's take a very simple example of one invoice which is $10,000. Okay. Currently, if one service provider is discounting it, either they can discount 100%, right? Or if they want to co-discount, then you need to have that lengthy procedure, right? It is not very easy. But with blockchain, because you can convert that one single $10,000 invoice into tokens, with blockchain, even retail user can participate in that tokenization process and finance that invoice. Got it? That's the power of blockchain. So there is a platform called Polytrade.
Sir, that would be P2P lending, right?
No, not P2P lending. It includes even normal marketplace also, right? You can see. So it depends on whether you are allowing retail customer to participate or not. But if you allow retail, then yes, that part becomes P2P. Up to that.
Because in the UAE, we have this Beehive platform where, I mean, it's working capital lending.
Yeah. That Beehive, I know. That is different. If you look at this platform, right, you can see under this solutions for asset origination, for asset buyers, for asset sellers. So this platform allows you to create tokens out of your invoices, let's assume, right? And then you can, let's say if one bank is ready to discount for 20%, they will buy 20% of the tokens, right? As simple as that. But you still need to look at the legal structure of that country. So if you are doing this in Dubai, under DIFC norms, they are allowing tokenization of the financial securities, provided the financial securities kept under the secure custodian. Okay. So you need to follow that norms. You can't have financial security available with you under your control and then try to tokenize it. No, you can't do it. You need to keep that under custodian so that there is an independent third party who is holding it on behalf of the ecosystem player, right? So that you can't then run away with that security. Got it? But anyways, we are going much beyond what we are supposed to cover. But this is the tokenized version. You don't require blockchain for a normal international transaction. Blockchain just helps you with better reconciliation because there is no reconciliation required. It is on the digital ledger, so it is self-reconciled in a way. Second advantage that you have is immutability. So once done, you cannot refuse or modify the transaction. That is benefit. And the third benefit that you get is the digital tokenized record that, okay, this is the asset which is created and it is moving from one party to another party. So you can have the complete traceability of the financial transaction. Okay, coming back to what we were discussing. So are you guys clear with this trade finance part? Any questions on the trade finance?
Fine.
Yeah.
Okay, so now, given that we have around 20 odd minutes, 20, 30 minutes maximum, we will now jump on to wealth management products, by the way. But if you have any questions on payment or lending, feel free to ask before we go to wealth management products. Okay. Any questions whatsoever? Because look, I have shared, or I will share this PPT rather with you all. And you can go through much more in detail about all the different business models, which we may not have time to cover today.
So is it possible to share this PPT in the chat itself? Because through Imarticus, sometimes we are not getting after this one.
Okay, got it. So I will share it with you right now.
Thank you, sir.
Yeah, I'm just sending it to chat. Okay, there you go. Hopefully you have received it now. Yes or no?
Yes, got it, sir. Downloaded also.
Okay, great. So you guys can keep this. You can appreciate that in 3 hours we can't cover everything, but I wanted to cover at least things which are relevant for CFOs. Okay. Now everything may not be relevant for CFO directly, but definitely it is worthwhile for you to go through all these things. Okay. So let us now move on to the investment part or wealth management part. where it is very, very interesting for people to look at new avenues available for corporate as well as you as an individual, right? Why not? So let me look at and share those things with you. Okay. So there are so many new asset classes which are available today. So many new asset classes. And some of those asset classes, right? For example, fixed deposit was very boring asset class earlier, right? Now you have aggregator like stable money. You might have heard about that, right? So look at the way fintech is converting the boring fixed deposits into interesting business. They have recently secured $15 million funding, and overall they have got 25 million or 20 plus $million funding. Interestingly, if you look at RBI norms on the broking of deposits, right? This was the business which was very, very thin margin business and not at all attractive business. Why? Because fixed deposit banks will not give you very high margin when you procure deposit for them, right? But the way they have marketed themselves, while again I am still as an investor, I also have my VC fund via which I invest, but I am not able to understand how they can justify the valuation that they have, right? Because when they just make 5 basis point revenue, okay? They just make 5 basis point revenue. On an average, even if they get more amount, it is not more than 10 basis point for sure. Basis point, not percentage, I'm saying. Which means that at such a small amount, right? So it means that when you do 1,000 crore of deposit, you are getting some 5 crore of revenue. Understand that, right? 1,000 crore of deposit, when you raise, you are making 5 crore of revenue. So you say 5 divided by 1,000. This is the this is what we typically refer to as a basis point, right? So if you look at this is 1%'s half, right? This is the revenue that they get. But for you as a company, not me as an investor, but you as a company who is looking for FD, this is amazing portal. Okay. They help you identify which fixed deposit at what rate you can automatically subdivide your amount. And you don't need to even worry about opening account and doing all those hassles because they have integrated directly with the banks. Which means that with a single KYC, you are able to take advantage of multiple different banks offering fixed deposit or NBFC for that matter as well.
Oh, so that means even if we don't have bank account with Yes Bank,
yes, you can
I
create
can do FD with Yes Bank.
Of course.
So I only need to have stable money account.
Yeah, and you need to do KYC once, and that same KYC will be replicated wherever you open your FD.
How safe this one, sir?
Sorry?
Safety point of view?
It is your amount is not with stable money. So what kind of safety you want? Whatever bank you are opening FD with, safety comes from that.
Okay.
So are they charging anything, sir, for this?
They will not charge you. They will earn some kickback from bank.
Got
But
it,
that
got it.
kickback, as I mentioned, is 0.5%.
Okay.
Sir, we would have access to the bank FD as well, like the login and everything from there as well, or it would be only reflected in stable money?
Stable money application, but of course it is with the bank, so you receive FD certificate from the bank itself.
So means you can redeem our FD directly from bank also after that in case there's some problem with the stable money, etc.
Look, you can approach bank for any problem as well, or you can approach stable money.
Sir, early redemption is possible in banks. So here also we will be able to.
Whatever kind of FD you are getting. Look, today what happens? Understand the difference between different FDs available to them. Gone are the days when you have a single simple FD available. Let us open Axis Bank. So if I go to Axis Bank, you will see different FD rates. Domestic fixed deposit plus. What do you mean by this? Right? It means that this fixed deposit cannot be prematurely withdrawn, but you will get higher interest rate on this. You can see premature withdrawal not allowed. Can you see that? This is available as a standard product from the bank itself. But if you look at, let's look at 1 year product, right? 1 year special rate. You have 7.25% where the withdrawal is not allowed versus where the withdrawal is allowed. 1 year. Yeah, look at this. 6.70. You can clearly see that when you are not able to withdraw prematurely, they are ready to give you premium of 55 basis point. Don't you agree?
Yeah.
So you are getting that premium. Now, you may not know what kind of premium is available across everyone, right? But stable money will be able to give it to you. That if you don't want to prematurely withdraw, you may not require that amount, for example. You are better off getting that 55 basis point additional interest rate. It is just the information asymmetry today, right? Because you don't know how many different rates are available, who is providing at what rate. So stable money is trying to just bridge that gap and removing the friction. Because today, when you are creating FD, you need to do 10 things, right? Here you can simply click and you have your FD.
So we can say that stable money is doing similar for FD is what Make My Trip is doing for flight tickets and hotels, right? It's something similar, like the idea.
Perfect. Yeah, absolutely correct. Similar. Aggregation. So if you look at the business models, which of course, because you are not learning fintech directly, I have removed it. But you look at the aggregation is one of the core business model in that, right? Which helps you with discovery and comparison. So stable money will fall under this category. All right. Okay, coming back to the next point. You
But
have
this one generally not allowed in case of company, no sir. Only like private individuals can apply for this stable money. Corporate normally not allowed. Or maybe using the ideal fund.
Not allowed, but what happens is that if you have under corporate, you have what we call as the wholesale deposit rates, right? Then any case you will get better rates from your bank. But if corporate, as a corporate, if you want, if you are a sole proprietor, you can still use it. But I'm saying as a large corporate, you can't. It is not going to make any sense because you will get better rate on your wholesale deposit by the bank.
Okay, thank you.
Wholesale deposit rates are very different, right? You know, sometimes it is also negotiated. Okay, coming back to this, you have another option called SNPL, Save Now, Pay Later. Save Now, Pay Later, not Hold Now, Pay Later, but Save Now, Pay Later. So you have multiple. So there are platforms like this, many more platforms, not only this. Backed by Kotak, so they are now writing that as well. So if you look at multiple, what they allow you to do is that they have partnership with all the large players. Let's say Make My Trip or Clear Trip or for that matter, Yatra. Then some other providers like Apple, Samsung, all these different vendors and merchants that you have, well, normally they have the partnership with them and they negotiate on a bulk basis. So what do? They say, okay, I will ensure that your product is bought on my platform, provided you give 10% discount. So let's say Samsung agrees on 10%, 20% discount, whatever is that number. What people can now do is that typically when you buy a product, you need to immediately spend and then you need to pay that amount, whatever is available. But there are certain purchases which can be a planned purchases. Understand the difference. Planned purchases, which means that maybe you are planning for international tour after 6 months. plant purchase, right? Similar to that, you are trying to purchase a television for yourself. Again, plant purchase. For durable items or for plant purchases, you can wait for some time. You don't want immediately. You can wait. Which means that you can today identify the value that you need to invest to get that much amount after 6 months or after 1 year. Multiple kind of a platform, what they allow you to do is identify that amount that you need to start paying today or start investing today so that you can get that final product after n number of months. Interestingly, what happens, let's say, Make My Trip. If you book Make My Trip today, you will get some discount any which ways, right? Irrespective of whether you are investing or savings. You will get some discount, right? There are some coupon codes available, correct? On that, you get some discount. But with platform like Multiple, you get additional discount over and above the discount that you any which ways will get. Okay. So what they show you is the aggregated return or ROI that you get on the amount that you have invested. To give you a very simple example, let's say the flight ticket is 1 lakh rupee. Today, when you are investing, Make My Trip is giving you 20% upfront discount, so 80,000. On top of it, because you are going to invest for 6 months, maybe you will get at 6% return on money market fund. 6% return is received on that. So you are given that you need to invest 80,000 divided by, or 80,000 minus that 6% return. Let's say 78,000 for the simplicity. 78,000 divided by 6. This is the amount that you need to pay every month for the next 6 months in order to avail 1 lakh rupee worth of flight ticket. But there is one more hidden benefit that you are getting, which they will add, by the way. It is a hidden benefit, which is that if you buy flight ticket after 6 months, the price might be much higher. Don't you agree? But if you are buying it today, when you are locking that rate today, you are also getting a much cheaper flight ticket because you are buying in advance, right? That we have not included here. But in typical calculation, they will also include that part. So what they will show you is that by investing 78,000 rupee, you are able to get 1 lakh rupee worth of benefit. That's the return that you are getting of 22,000 divided by 78,000 into 100, whatever is that value. This is what they show you, return on asset or ROI, right? Which is okay, whatever way you want to show. But in reality, you are able to save money and you are able to do a plant purchase. Clear everyone on this? Any questions?
Yes.
Okay. Now, given that we already are running out of time, the last thing, very interesting thing that I would like you to know is what we call as a private market access. Here you have what we call as all the fancy asset classes available. For the qualified institutional buyer or qualified investor only, you have this fancy asset class available. Otherwise, you don't have this fancy asset classes available to everyone. One is fractional real estate. Look, there are multiple different ways in which you can get it. One is alt DRX, digital real estate marketplace. So let's assume I sign in. So if you look at, look, you are able to buy even 2 square feet, right? In some other properties which are available on, look at the blockchain ledger. This is the blockchain solution. And you can see under documents, I will have the loan document that I have provided, partner lender loan document. And this is the FSO agreement, which is nothing but the token agreement which is there. And under the statement also, you will see that what happened, what amount of fund I added, what amount of distributions has happened, and your income, rental income on those 2 square feet, I'm getting 39 rupees, some random amount of whatever. Right? It is just to demonstrate that these are the products available. I am showing you this, but you can understand that, okay, you have opportunity and option to access the overall real estate market, where you can decide on the property. You can choose which property you want. Unlike REITs, where you don't have control on which property you can invest in, here you have the control on which property you want to invest. So for example, I wanted to buy a particular Bangalore property, which was in the center of the Bangalore. So I bought it. I bought only 2 square feet. So you can understand that even 2 square feet you can buy. And currently, if you look at the capital gain, whenever it is sold up, or I can even sell it in between because it is a tokenized version. At the market rate, whatever capital gain I get, I will be able to, let's say, comply with all the regulations and still sell the shares because it is a fractional of the overall investment that I have. Coming back to.
But
But
sir,
sir,
if we are making investment,
yeah,
then what type of the benefits we will get, like some security about legal securities, etc.
You are getting all the legal security that you want because it is you are party to that agreement anyways, right? So typically
We are
what
part of the agreement, but that agreement is between like all DRX
that
and
agreement,
with us.
I will clarify. That's what I'm trying to tell you. Right? That agreement is between you as an entity. Understand, as an entity means what? As a SPV. Correct? There's a
Yeah.
special purpose vehicle created where all the money goes and then SPV buys that.
Okay.
So SPV will buy that and you are just a shareholder in that SPV up to that extent.
Kind of mutual funds.
You can think of that as that, but mutual fund is again a legal structure for the same thing. In fact, SEBI has come up with micro REITs framework, right? This is one of that kind of a format. SEBI micro REITs. It is a legal framework, by the way. Micro REITs SEBI. Edge bids, your own bids, invest in fractional real estate, alternative REITs managed in India as first small market real estate. So you can see property share. All these are the regulated REITs now. But micro REITs, where you can choose which property you want to invest in and you can buy a fraction of that. Okay. Now, if you want to look at it, right, under the SEBI norms, if you want to apply, then you need to buy minimum, I think, 1 lakh or 10 lakh something. Okay, under the SEBI norms, that is a minimum ticket size. All DRX is going one step ahead, more than what SEBI allows, saying that okay, there is SPV created even for that, where you can directly invest into that SPV, and then SPV will invest into that property.
So will this SPV, like if there's a norm for the 10 lakhs, okay, if we direct go for the micro rates, so so they are making the multiple SPVs that can make the micro rates.
No, micro REITs is a legal, separate legal structure. And what I'm referring to that is where you can create SPV, multiple SPV. So that is an alternative structure. Micro REITs is much, much safer and legal structure, while the other one, all DRX, it is a structure where you are relying upon the Indian Contract Act and everything. You are having the legal protection, but it is under MCA and all those things, not under SEBI.
Okay.
That's the only difference. Which
And
is
the all DRX is coming under which authority?
as I mentioned, right, they will not come under SEBI. They will come under. So I will show you. They have written also which platform, at what extent they are compliant with what. You will see that here. So private opportunity, and then you have FSO, and then you have TradeX, under which you have SEBI compliance in certain area, and then you have MCA compliance on certain area, right? Okay, so let me show you under this private opportunity that you get, right? And this that you get, this is the non-SEBI compliant area, okay? With as little as 10,000. This is not directly SEBI compliant, okay? But it comes under your MCA norms, where you are creating SPV, and under that you are having the contract, okay? That is where it. But when you look at the outside of that, where you have the private investment opportunity of minimum 10 lakh rupee, that is where the SEBI comes into picture.
So the 2 square feet you purchased through this only?
That is not hard. That is through this, but that is not under SEBI.
Okay.
So they will give the physical delivery, so not those square feet. Suppose some 500 square feet or something they purchased, so they can deliver also, like or only for investing purposes.
Deliver means what? You want a physical space. That's what you are saying.
Yes, sir.
So you have right, but you don't have the because this might be like 10,000 square feet area, right? So if you are buying exactly 10,000 square feet, which is available under one office space, you can't buy physical thing.
Okay.
Because it is part of SPV. So no, it is not like that.
Okay.
So what SPV owns that physical space, yeah?
Yeah. SP owns that physical space.
Okay.
Okay, coming
So
back
what
to another
returns?
Sorry.
What returns does someone expect on this?
Around 13 to 15%, including rental yield.
Because I mean, rental yield in India would be around say 2.5-3%, right? If it's a commercial, then it would be a different yield.
It is a commercial thing only, by the way. This is only commercial.
Okay. Okay.
Yield typically you will get on commercial is 9%. I will tell you the numbers which are there, right? So around 9% is your rental yield, and around 5% per annum is what they are assuming is
Appreciation.
your appreciation.
Okay.
Reality might be different, but I'm just saying that is how they portray the return. 9%
Yeah,
is
exactly.
which is a given yield, which is available, but 5% is a number in the sky. No one knows reality.
Yeah, again, for example, in UAE as well, we had similar kind of fund or similar kind of a platform where the rental yield, which was, I mean, shown for properties, they were way ahead of the market curve. So
Yeah. So that they are including both, by the way. They will never show rental yield in isolation. They will show both together. Otherwise, it will not be lucrative to you, right?
exactly. It would be easier to compare apple to apple then.
Yeah.
Sir, and how secure would this be? Like, so what's the risk of the SPV going bankrupt or getting into some fraud?
So secure, as I mentioned, it is as secure as any asset class based on the trust that you have from the founder. So if you look at the legal structure that you get in SM REITs is much more secure because it comes under SEBI, right?
Correct.
And ODRX structure, you need to trust the founder and you need to trust the way they have created, let's say, certain escrow funds, right? Where they are keeping everything. That is a trust you need to have.
Okay, got it.
Okay, coming back to the last point, because we already have a lot of time, but we started late, so we'll spend a couple of more minutes to look at some of the other aggregators of investment, right? These are the investment aggregators and the new product creators. So if you were to look at these guys, well, let's say Grip Invest, I'm giving one example. Of course, there are many more platforms. I myself have invested into more than 30 plus asset classes across 70 plus platforms.
How do you keep track of all this?
Sorry?
How do you keep track of all this?
No, I need to know because I myself am a VC fund operator and I teach as well. So I know I should know each and every new product in the market. But anyways, so coming back to this, look, so you have Explore High Yield Fixed Deposit curated by GRIP. Now they have partnered with Stable Money behind the scene, right? So they have partnered with Stable Money so that you can directly use that as an asset class. Stable Money is an aggregator in FD asset class. GRIP is using them to curate for you different asset classes put together. So here, if you look at, they are providing different options under the different asset classes. Under active offer, you have basket offers, where high value RBI regulated basket of multiple different investment put together. So which are these assets? 1.4x, 47x security cover, and on an average 14 months average tenure, where you have this asset classes. So basket constituents, let's look at them. Share Microfin Limited, this is one constituents. Then you have another one, Velicham Finance Private Limited. This is another constituent in this basket. So there are two different providers. So one is, I think, Microfinance Institute, another one is MBFC or Asset Lease Financing, whatever it might be. Yeah. It is a BBB minus rated company, by the way, providing MSME business loans, agri and allied loans, so on and so forth. And Share Microfin is also there. And if, again, they are also BBB minus, which means that the return that you should get on this should be much, much bigger and better, right? Because it is BBB minus. And you can see it is true. It is 13.7% that you are getting pre-tax IRR. And because of that, because it is high risk, BBB minus, you are getting 1.47x security cover, which means that up to that much you are covered, secured. If NPA goes beyond that, then you are in trouble. Right? Till that time, you don't have an issue. So this is how they create the basket and give it to you. This is under the proper SEBI norms of securitization, SS securitization, where they create the security-backed bonds or security-backed, let's say, this is what they create, and then they, based on that, they allow you to trade.
So this is secured bond.
Secured bond. So that is how they create as a structure. Legal structure is there, and it is under SEBI norms. Then you have corporate bond. This is not created by GRIP, by the way. That earlier basket was created by GRIP. These are the corporate bonds available directly, right? So at 12.5%, 13%, whatever. So you can see and invest in them. This is SDI, RBI regulated SDIs, not SEBI, RBI regulated. These are the unlisted SDIs. And what they do is that they combine multiple loans and create a securitization under SEBI norms. They list on the exchange. And then under the invoices, they again combine and consolidate invoices, and then they create security on invoices as well. So LoanX invoices are the products available. So RBI regulated R3 and SEBI regulated R3. So under RBI regulated, you have LoanX products, and under the SEBI regulated, you have different other products. And here corporate also can invest, by the way. All these products I'm showing you, even corporates can invest. Okay. Not only individual, but also corporate. Corporate will need to do KYC, but still they can invest under this. Are you guys clear on this? Any questions?
Yes, please.
No, sir. No, sir. Clear.
So I have covered majority of the new products and services which are there. There are many more products available, which I have shared in my PPT as well. Given the 3-hour time frame, I wanted to give justice to the real life examples, which I have tried and do my best. I have not gone through PPT structure, which is a standard structure. Hopefully you learned something out of this session. If you have any questions, feel free to ask before we end for the day.
One more session required, sir.
Yeah.
We'll learn a lot of things, sir.
Yes. So what is the request that you have? Okay, it was just a comment, not a request. Okay.
It was a request to Imarticus to arrange one more session
One
for
more
us.
session, sir.
Okay, that depends on multiple different things. They will figure it out. But anyways, so
Sir, I have one request for you. Means, how do we keep abreast of all these recent developments? Any subscription or any literature that you may prescribe?
there are many ways of doing this, by the way, but the major thing is that what you need to do is the research of your own every day, minimum half an hour to spend, right? There are different like avenues available for you to search and upgrade yourself. The simplest and free is Google Alerts. Okay, you can create Google Alerts on multiple different topics, subtopics, and you will keep on getting updates every day. But what you can do beyond that is use certain AI tools available. Frankly, you have multiple AI tools available where you can create alerts, convert that into what we call as a RSS feed. Okay, and then that AI tool will consume all the RSS feed, read on your behalf so that you don't need to read, and it will summarize and give it to you on, let's say, 8 a.m. morning. Right? You can use such tools as well. There are multiple tools. So Feedly has one such tool. But you need to know how to connect everything and do it. That's it. There is no technical knowledge required as such, but you need to know what you are looking at and how to connect one application with another application. That's it.
Thanks.
Okay. Thanks everyone for your time. See you guys. Bye everyone.
Hit the like button, subscribe to our channel, and tell us in the comments below what topic we should dive into next.